Good morning. Okay, cool. How's everyone doing today? It's like ES is heading down to retest 4,400 right now. SPX 4364 found a little bit of support at 4360. QQQ's running a little bit, but that may just be market open. Where's NQ? NQ just under 1550. 15,050. And Nvidia getting fucking hammered at open. Jesus Christ. Is it down? It's down 3% overnight? What about AMD? AMD not down as bad. I will see how that performs. Okay, let me see. We got this video up and running. Is this live? Okay. Did JPow make sweet mayo salad with the French lady? Well, he's fucking late to his speech. What'll it be, Pickle Man? We going up or down today? We're still above gamma neutral, which is now here, roughly. So they still have some advantage. It's harder for the price to drop. Anyone else get the Fidelity message that BlackRock owns 7% of Nvidia? No, but I'd believe it. It's pretty heavily weighted in ETFs.
Hello and welcome back to the final
Oh,
panel of our conference.
there we go.
Inflation is lingering. The European Central Bank, the Federal Reserve, and the Bank of England have all raised rates. Even the Bank of Japan is considering unraveling its decades-long ultra-loose monetary policy. The question now is how long will policies have to stay in restrictive territory to bring inflation back to institutions' 2% goals? And is it possible to do so without creating a recession? Ladies and gentlemen, the members of our next panel will bear a great deal of responsibility for bringing inflation back down to 2, and not only that, but keeping it there. Sarah Eisen, the closing bell anchor at CNBC, will
For
be
my
moderating
straddle,
this session.
I'm not sure yet.
Over to you.
Retest of
And let me just say, as a business and
4375. I'd
financial
probably
journalist
hang on to the
who started
long
out in foreign
side.
exchange, this is pretty much as good as it gets. So thank you for having me
A
talking to the
failure.
Big Four today. And what I love,
failure
I'm
here
excited for this
to
conversation
bounce.
because it's always fun when everybody's in different places.
I might hold
and
on
going
to
at
it
different
till
speeds,
gamma neutral.
and maybe
I have a little bit of
disagreeing,
theta.
if you dare to do so today. So thank you all. President Lagarde, I'll start with you as the host of this meeting. On the view from Europe, I'm curious, where all of you are in terms of this policy path. We've certainly seen a fight against inflation. You've been very clear that there's more work to do. How much more?
Thank you so much, Sarah. It's very nice having you in this closing moment. And I'll take this opportunity to thank all the contributors, those who have prepared papers, those who have worked with the presenters, and all the panel members. It's been really, really a rich conference, and I want to thank you. So, as far as the European Central Bank is concerned and the Eurosystem at large, we have covered a lot of ground. We have increased our interest rates by no less than 400 basis points in very short order, less than a year, and we still have ground to cover. And I think that, as I said earlier on, we are data dependent. We will decide on a meeting-by-meeting basis, but we know that we have ground to cover, and if our baseline stands, then we also know that we will very likely hike again in July. That I will not tell you, and for a very simple reason that I just mentioned. We are data dependent. We'll decide meeting by meeting, and we'll tell you, for the September meeting, we will have received a lot more data, information, survey results, and it's going to be another projection.
How dare she leave me at home?
By the staff of the ECB.
Maybe
So
just at
we will
JPAS
have
hotel
a
room.
lot in
I'm
our
back,
hands to,
kind of.
to make a
ISP gave me a new
Governor
modem,
Bailey, you
and the new
surprised
one
the
wouldn't
market
connect yesterday.
recently,
Now I only have
raising
100
interest rates by
megabits.
50. You did a double. Why did
Sad.
you feel the need to do that?
That is sad.
Well, it really picks up on the theme that Christine has just developed. First of all, I mean, the UK economy has turned out to be much more resilient, and that's a good thing. I mean, there's many good aspects to that, but what goes with that resilience is signs of a very tight labour market, which is showing through in pay awards, but also showing through. I mean, we have an unemployment rate of 3.8%, which is historically right at the low end. So that resilience is coming through that way. But when we looked at again, to Christine's point, when we looked at the data, because we too are being driven by evidence at the moment, the cumulative data, both particularly on the labour market and on the inflation release we had, which to us showed clear signs of persistence, caused us to conclude that we had to make really quite a strong move at that point. It was justified. My own view on that was, if we were really of the view that we were going to do 25 and then we were really sort of baked in for another 25 based on the evidence we'd seen, it was better to do the 50. And then we will, as Christine said, we will be evidence driven. So we will wait for the next set of evidence for our next meeting, which, to Christine's point again, will also be one where we will have a full forecast.
Have you received a lot of flack for the move?
Well, I think at the moment I can understand why there are critics of us and central banks. We have a job to do. I'm very clear that our job, all of us are very clear, I think our job is to return inflation to target, and we will do what is necessary. I understand the concerns that go with that, but I'm afraid I always have to say that it is a worse outcome if we don't get inflation back to target.
Something I know you've all been saying. Chair Powell, you've said it many times, and yet you paused, but you're not calling it a pause, and you're not calling it a skip. So what are we calling it?
Well, first of all, Sarah, thank you, and Christine, thanks for hosting us here in Sintra. So what we're calling it is maintaining the level of the federal funds rate at its current level for this meeting. Thank you. And we did that. If you think about it, we've raised the federal funds rate by 500 basis points since a little more than a year ago, and we think so. We've come a long way. We also think that there's more tightening power coming through. Really, policy hasn't been restrictive for very long. We started at negative real interest rates. And
Damn, he's got the no tie? I don't even know what the fuck this means.
But we haven't been there very long. So we believe there's more restriction coming. And
He's got like a little tan going. How many days has he been there?
And Christine's as well, is very strong labor market. We've got a labor market that where jobs are being created, there's strong wage gains, and that's driving spending,
Just
driving real
fully
incomes,
embracing
driving
the
spending,
European
which is driving
lifestyle
more
right now.
demand and continuing.
It's
to
got like
drive
a tighter
labor market. So
jacket,
the labor market is really pulling the economy.
linen shirt,
And
no tie.
My colleagues and I, as you will know, wrote down.
No
about
glasses?
Two more additional rate hikes. The median was.
He's
quite
probably not
strong
wearing
majority,
fucking
actually wanted
socks.
2 or more rate hikes. And the reason for that was, if you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
So I don't get why you didn't raise rates at the last meeting, especially I think it was a surprise that it was a unanimous decision to hold rates steady when you said a majority think that they still need to go farther on raising rates.
It's really just as you get closer and closer to the goal. What we're aiming for is a stance of policy that's sufficiently restrictive to bring inflation down to 2% over time. As you get closer to that, you get closer to the place where the risks become more in balance. So, we did 4 75 basis point hikes in a row starting in June of last year. In December, we moved down to 50. Then we did 3 consecutive 25 basis point hikes. So this is really just a continuation. We're going to move the decisions a little bit, make them with a little bit more time in between them, in an effort to get more information from the data to see how much restraint is really coming.
Cheers,
from
Puts.
the
Love it.
from rate hikes that we only made now, in many cases, 6, 8, 9 months ago. So that's why we did it.
So maybe in every other meeting hike.
We've not decided that. So we only think the only
Thank
thing
you,
we decided
Jenna
was not
Fontes.
to raise rates at the June meeting. We have not made a decision to go to that. It may work out that way. It may not work out that way. But I wouldn't take moving at consecutive meetings off the table at all.
I'm trying. Governor Ueda, first of all, it's great to talk to you. We haven't heard much from you outside of your policy meetings in Japan. I think the world wants to know why you're the global outlier here. You have decided to maintain your easier monetary policy in the face of rising inflation. Why?
So a simple answer would be, although the headline rate of inflation is above 3%, which is well above the 2% inflation target, we think underlying inflation is still a bit lower than 2%. That's why we are keeping policy unchanged at the moment.
Even though we've seen measures, including core, right, higher than the 2%
the usual
level.
core is also above 2%. But let's say, let's look at the rate of increase in wages, which is an important determinant of underlying inflation. It has risen, but is now running at around 2%. Now, if you want a 2% inflation rate, wage inflation that's consistent with that would be slightly or well above 2% if you assume productivity growth rate is positive. So there's still some distance to go, we think.
And as a result of your policy being different than all these policies of your colleagues, the yen has gotten very weak and continues to weaken by the minute. Is it too weak?
Well, the yen is being influenced by many factors other than our monetary policy, including the policies of these 3 banks. So we'll see. We monitor the situation very carefully.
Monitoring the situation?
Yes.
For intervention purposes?
No, it's the jurisdiction of the Ministry of Finance. Decisions on intervention.
President Lagarde, how much would you like to see inflation moderate from these levels? Because we've already seen a nice moderation for you to feel comfortable taking a pause or potentially going the other way.
Well, this is not what we're considering at the moment, okay? But if I look back at what we've covered, inflation was, I think the highest reading we had was 10.3. We are now at 6.1 headline. Core has moved a bit down, but we are really looking at both headlines, which is the measurement that we have agreed in our strategy and that is visible for people, for the consumers of Europe, but we're also looking at underlying inflation. And on that front, we are not seeing enough tangible evidence of the fact that underlying inflation, particularly the domestic prices, are stabilizing and moving down. So we're looking at as many measurements as we can because we want to be in sufficiently restrictive territory for long enough so that we are confident that we reach our 2% medium-term target.
Why is it so sticky, Governor Bailey? And why is your inflation rate higher than that of Europe's?
Well, let me distinguish headline and core for a moment. So with headline inflation, I do expect it to come down markedly this year, as we've been expecting for some time. And a lot of that is to do with the fact that the unwind of energy measures in the UK is on a sort of somewhat longer track, so that we will see some quite sort of discrete sort of jumps down in headline inflation in the UK throughout the rest of this year. And indeed, actually, you know, energy prices are now somewhat weaker anyway than we thought they would be even quite recently. So it's core that's the issue, just as Christine has said. Core is much stickier. I think I come back to the labour market again. We have a very, very robust labour market and strong labour market in the UK. One of the striking things about the UK is that the size of the labour force is smaller than it was at the outbreak of COVID. So we have had a shrinkage of the labour force. We're seeing some reversal of that now, but we're still not back to where we were pre-COVID. So that is causing you know, the position in the labour market to be very tight. And I see this when I go around the country talking to firms, because I can, you know, what they say to me very frequently is that their plan is to retain labour as much as they can, even in the event of a downturn, because they've been concerned and it's been difficult to recruit labour. So that's certainly taking place. So I would say there's a backdrop of a very tight labour market going on.
Is it Brexit related also?
I don't think Brexit is a part of that labour market story. I think a lot more of it is actually to do with, frankly, you know, the response to COVID. I mean, we've seen people. The UK is a little unusual in this respect. We saw people come out of the labour force during the COVID period. Other countries have tended to see that position reverse more quickly and more strongly than we've seen in the UK.
What's the
Governor,
lowest you
what
can
about
see
when it
SPX
comes to the
dropping that
inflation
would not
path
keep
for
them
you?
from trying for
I mean, I know you'd like to see it
43.75,
continue to rise
4,400
from
with
here,
their
right?
zero
What would
GT
it
call
take
pumping?
for you
Call
to
pumping.
really strongly consider
Below delta neutral.
abandoning the yield curve control and negative rates?
So 42.80.
So we have a forecast or projection of inflation path that looks like it's going to go down for a while toward the end of this year on declines in import prices, and it's spilled over to domestic prices. And from there on, we are forecasting some increase in the rate of inflation.
There you are.
2024. But we are less confident about the second part. If we become reasonably sure that the second part is going to happen, that could be a good reason for a policy change.
If you see a steady increase.
If we are reasonably sure that the second part of the forecast is going to
But didn't you learn from these three that inflation turned out to be not transitory?
Excuse me?
I mean, wasn't one of the lessons from the last year that inflation wasn't transitory and that there are some elements in it, was not,
Yeah.
and that there are some elements of it that are sticking and proving difficult to fight?
Right. So the second part is the sticky part. But it's still, as I said, we think less than 2%. We hope to make sure that it's going to go up to 2%.
Chair Powell, we've seen some progress in the U.S. Certainly, if you look at the headline CPI from 9% down to 4%. I know you're focused
She's
on
shorting
core,
the yen. Yeah.
But what would make you feel better about it? That you could.
Or she's
remain on hold?
long yen if
Progress
she's
on,
pushing for
headline inflation
policy
coming down is
change.
certainly welcome and ought to help keep inflation expectations anchored. But I think it actually helps to think about core inflation broken into three pieces. The first of which is goods inflation. And we've seen goods inflation coming down for 6 months now. And that's because supply chains are
Yesterday wasn't
improving.
that big of a
The
pump.
shortages are more or less gone, and also because consumption
It
is moving
was
back to
pretty
services
small
away from goods.
for
So that
the
part of
zero
story
GT
makes
pumps
sense.
we've seen in the past.
Housing services
There's a
is
lot
the
more
next
put
piece, and
selling, but
between
a lot
that and
less
goods,
call
you have
buying.
a little bit less than
Less
half of the
leverage.
total index. And you see now the new rents that are coming in are at lower increases or no increase, and so there's significant disinflation in the pipeline there, but it's going to take 12 months or 18 months to get there. The place where we haven't really seen much progress is in non-housing services, which is a little more than half of our core PCE inflation index, and that's hot
4% on
hotel
top of
services,
previous
travel
9%
services,
does not show great
food
progress.
service, financial services, healthcare, those things. It's a generally very labor intensive.
Wait,
Some of it's
what?
quite cyclically sensitive, but some of it's not.
You-
The point is, that's where we're not seeing a lot of progress yet, and the reason is that, or one explanation for it is.
Are you saying that it is progress?
Labor costs are really the biggest factor by far in most parts of that sector, and so what we need to see, we've seen a lot of signs of softening in the labor market, but it's just kind of beginning. We need to see a better alignment of supply and demand in the labor market and see some more softening in labor market conditions so that inflationary pressures.
But
in that
interest
sector
is
can also
rocketed
begin to
at
subside.
Are you surprised that hasn't happened yet? After
43.60
500
and
basis points of tightening already in
43.55.
a little over a year?
Yes, I think widely it's been surprising that inflation has been this persistent, but I think the bottom line is that policy hasn't been restrictive enough for long enough to start to see those effects. And the service sector is not especially interest rate sensitive, by the way, as opposed to, for example, the
Jesus
goods
fucking
sector.
Christ.
So we wouldn't expect it to be the first to be affected.
Sold
but we would
puts?
ultimately expect, as demand softens and as the labor market
I
conditions
don't
go
think so.
more into balance between supply and demand, we would expect to see inflationary pressures subside in that sector as well.
Do you guys coordinate? Do you talk amongst yourselves?
Yeah, of course we do.
I mean, do you
But
call before policy meetings?
Can I
Yeah,
just,
please.
I just want to follow up on what Jay said, because I think he's completely right. And I think that this is what I call the catch-22 issue, where we have an expected
Fucking
catch
volume
down,
is insane.
where
Holy
manufacturing
shit.
eventually will align, or services will align on manufacturing, and that would be the logical consequence of the lag time that it takes for services to align with manufacturing.
Like, since market
to,
open, gamma at the
prices
43.55 and
sector.
43.60 strike has
catch-up
increased by
is that
like
of
50
labor,
and 60
because it is,
million
as Jay
respectively.
said, labor intensive. It's generally relatively
Yeah,
low
on
productivity and
SPX.
low skilled jobs in those sectors, and also those jobs that are going to seek the catching up.
It
with
outweighs all the
pre-COVID
call gamma.
times. And how that
Combined.
catch down, catch up will be resolved is going to be critically important for where inflation is heading. Because if we see inflation going down in that service sector, and movement of wages while increasing at a moderate pace, then we would be in a relatively good place. But that is totally question mark for the moment.
Yeah, it sort of raises the question, Chair Powell, about whether we need to see a much higher unemployment rate in the US, and you're all dealing with a tight labor market, to finally really break inflation.
So, that the way we think about that is that there seems to be a path still for labor market conditions to soften and for demand and supply to get back into balance without the kind of large job losses that have happened in many prior cycles. And the reason for that is the level of job openings that still exist in the labor market. So it's still set 1.7 job openings for every person who counts as unemployed. That has been coming down. Actually, the number of job
Bear
openings has come
flag?
down
I
by
wouldn't
almost 2 million.
trust any
What you're
formations right
seeing
now.
is you're seeing wage pressures. They're still high, but they're definitely coming down. You're seeing surveys of workers and businesses suggest that the labor
think
market
it's
is not as
bought,
tight as it was a year or
like-
two ago.
Like
So
they
you're
straddled the
seeing a
downside
job
last
creation
minute,
is
but
beginning to come. There are a
everyone
number of
piled into it.
indicia that would suggest that we're getting the softening that we need. We're getting it slower than we'd expected, but nonetheless, it's happening. So it's still a possibility there. But it's so uncertain right now that in my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though. But it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible. And of course, many forecasters do predict that.
Is Europe in recession, President Lagarde? I mean, we've seen 2 negative quarters of GDP. I don't know how you define it. But
I think the first quarter of 23 was actually completely flat, wasn't negative. So technically, I think you could argue that we did not see a recession, but it's stagnant. say the least. And the, the expectations for Q2,
No,
particularly in
she
the
said
industrial
stagnant.
sector, if I look at PMI numbers, are not particularly are not giving us great hope that there will be a strong recovery. We see a second half
Stagnant
of
with
2016,
inflation? Stagflation.
up from the first half, certainly, but moderate. We have a 0.9 forecast for the whole year.
Do you agree with Chair Powell? Do you think you can get away
Jesus
with this
fucking
tightening
Christ.
cycle without
Recession
dragging Europe
adjacent.
into recession?
Our baseline does not include a recession, but it's part of the risk out there.
Are you willing to tolerate a recession?
Well, the interesting thing for us is that if you go back to last November, when we did a forecast, we were predicting quite a long but quite shallow recession. And the economy, as I said earlier, has turned out to be much more resilient so far. Now, I think you can sort of point to a number of things that underlie that. One of the things I would point to is the fact that we've had a very sharp fall in energy prices in Europe. And that obviously has helped with the whole question of the terms of trade shock that we've been having. It's done quite a bit to reverse that terms of trade shock, and that feeds through into national income. So I'm not surprised that we've had this reversal in one sense. What was surprising, but actually very helpful, was that, of course, we did have this big fall in energy prices and a much better winter, frankly, than we thought we would have. So, we're going through this year now in a more resilient position than I expected. So we're not currently forecasting it, but obviously we have to watch it very carefully.
How's the Japanese economy faring? I mean, it's very exciting if you look at the Japanese stock market at a 30-decade high. What's happening fundamentally?
Their currency is worthless.
I mean,
of course their stock market's up.
apart from the contribution from some inventory investment, domestic economy is expanding at a pace slightly above potential, I think, driven by pent-up demand. We relaxed pandemic-related restrictions in May, and this is stimulating consumption and investment. There's also green GX, DX-related business fixed investment taking place. So investment is fairly strong at the moment. We think the economy is going to expand at slightly above potential for some time. But there's, of course, a lot of uncertainties going forward, including what may happen in Europe and the United States.
I asked if you guys coordinated or talked about monetary policy before. I mean, does that happen? Should it be more coordinated? Because you're all doing different things right now.
Well, I mean, I'll start. I mean, obviously what we don't do is say, what should we do, what should you do? Because we're all setting the monetary policy for our areas, and that's the law in all of our areas, actually, so we don't do that. But we do talk a lot, and I think it's important. I mean, it's important at all times, but it's particularly important in recent times at the moment because we're facing such big global shocks. I mean, we've got common shocks. They differ a little bit in terms of their impact and their effect, but there's some huge global events going on that are affecting all of us. So, I think we do talk quite a lot and we see each other quite a bit because it's important we do that. And, we share wisdom on how we're sort of interpreting the things that are going on around us.
Yeah. I guess we are in a flexible exchange rate world, so we do policies independently. But of course, we exchange information, which is very, very valuable.
Do you think that, Governor Ueda, do you think that they are over-tightening?
No.
No, you don't. You approve of the policy. You've had a very tight labor market for a long time in Japan, even before COVID.
Yes.
Demographic issues
demographics
there. Yeah.
is working in a way to tighten the labor market for quite a long while. And it's going to continue this way for a while.
I mean, the economic conversation, it gets into an interesting question, Chair Powell, where now we're wondering, easier to fight inflation last year when the economy was doing better, but now that we're seeing signs of softness and weakness in manufacturing, and you mentioned the labor market starting to cool off, about overdoing it and the risk of overdoing it. Do you wonder about that, or you're still just focused on inflation?
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting, still is consistent with with an economy that's resilient and growing, albeit at a modest pace. As I mentioned earlier, though, yes, there was no question the first question was how fast should we go, and we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take the federal funds rate and you subtract, some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe and the committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
So you think the risk is still of doing too little and not getting control of inflation?
Yes, and of course
But inflation expectations are, I don't have to tell you, very well anchored.
No, but the thing with the risks is that there may be social costs associated with restoring price stability. The social costs of failing to restore price stability will be higher in almost all likely cases. We've seen what that looks like, and it's just something that we have to do. It's one of the principal things that society counts on us to accomplish, and I think we all feel committed to accomplishing it. It is of course a good thing that inflation expectations have remained anchored all this time, but our understanding of inflation expectations is not a precise one, and the longer inflation remains high, the more risk there is that inflation will become entrenched in the economy. So we have to, the passage of time is not our friend here.
What about a higher inflation target? I know none of you want to talk about that, but on Wall Street, there's this idea that a lot of things are changing in our economy structurally. The onshoring of supply chains and chip plants and all of that is going to be expensive and could permanently create higher inflation rates. Couldn't it, President Lagarde?
Well, at this point in time, and given the fight that we lead against inflation, the yardsticks that there is, the strategy that we've agreed, the expectations that we have, and the inflation targeting, as it has been said, there is no way that any of us, I think, would consider changing the gatepost halfway or more than halfway through that journey. I think it's wonderful to have a forum like Sintra, which brings together academics and other than policymakers to actually consider those ideas and to explore them and to weigh the cost and benefit and all the rest of it. But at this point in time, I think we have to be as persistent as inflation is persistent, and we have to be resolute and decided and determined in reaching the target that we have set, and not debate the target as we are running that race.
But it does raise the question, Governor Bailey,
Just don't try to play the market till
how
it's
far
over.
inflation will come down to.
Stop.
It does, but let me
Everyone
reinforce
stop
what
asking me what's going up and
Christine
down.
said.
Wait till they're done talking.
What is the inflation target? It is the definition
We're
and
just going to
practice of
chop in
price
the
stability.
straddles until then.
In our legislation, it is what price stability is taken to be. That is the 2% target. And I don't think anything has changed in terms of what we mean by price stability. And I think that's a very important point to start with. It's the anchor that we have to always maintain. Now, in terms of bringing it down, yes, I mean, we're facing, have faced and are facing the biggest challenge for a very long time. But we have to meet that challenge. I don't think it is the right thing to do to say, well, this is all a bit difficult, let's change the target. I really don't think that is the right thing to do. I think that would be a very bad thing to do. And I think, although I very much agree, as Christine was saying, that there are things we understand about inflation expectations and things we don't understand about inflation expectations. I think taking risks of that nature with inflation expectations, but also fundamentally changing what we mean by price stability when there's no good reason to do that, I think would just be the wrong thing.
How do you read, Governor Ueda, the inflation expectations? Because they've crept up in Japan as well.
Yes. We've been for a long time trapped in a zero inflation expectations equilibrium. So we've been trying very hard to move this to a 2% inflation, 2% expectations equilibrium. To do so, we had to de-anchor expectations from zero, raise inflation expectations, And in the future, we will have to re-anchor them at 2%. This is a formidable task. And now we are seeing signs that inflation expectations are rising. But as I said, not to the extent that we are fully in the 2% inflation expectations equilibrium.
It also raises the question, you mentioned the labor market and some of the post-COVID changes about just how COVID has distorted the data and has made travel, for instance, so strong for so long. And I wonder, Chair Powell, how you look at the COVID impact on the economy and how it's changed the way you make forecasts and you think about what's happening right now.
Well, I think there are changes, and we don't know how persistent they will be. Certainly work from home, and you can see the effect on commercial real estate, particularly office real estate and the surrounding retail that's suffering in many major cities. We don't know how long that will last. It feels like some part of that will be persistent and will last. You mentioned the data as well. I guess response rates to a lot of the data that we collect and the other organizations collect, the response rates have gone down, and you're seeing a lot of volatility in some of these data series, more so, I would say, more so than we've seen historically. So the data are even a little bit foggier than they usually are. But we'll be, in terms of what the effects of COVID, it's going to have long-term effects on the economy. There may be loss of productivity. There's certainly been, for a generation of kids, some loss of education and training. I think it's hard to say how persistent all this will be.
What is your level of concern of commercial real estate, since you mentioned it in the U.S.?
It's something that we, of course, are watching carefully. The way it lays out is the large banks don't have large concentrations of commercial real estate, so that's a good place to start. A surprisingly large part of exposure to commercial real estate is in the banks that are under 100 billion. But there, the worry is more banks that have a high concentration, and they're relatively few. So it's something that we're carefully monitoring. Bank supervision has a playbook for this. So supervisors are talking to banks about their concentration in real estate and what can they do and how do they manage themselves out of this. It's something that we're well aware of. It's not a surprise, and we're focusing on it.
Is it one of the reasons you were cautious in the last meeting?
Commercial real estate? I wouldn't say so. No, I just, generally speaking, it was at the last meeting. It was about, what's in the pipeline, how far we've come, what's in the pipeline. I will also say that, though, that the bank stress that part of the decision, in my thinking anyway, was the bank stress that we experienced earlier this year. There's a fair amount of research showing that when something like that happens, bank credit availability and credit can move down a little bit with a bit of a lag. So we're watching carefully to see whether that does appear. Of course, tightening in financial conditions is what we're doing intentionally. So we have seen bank credit conditions tighten. The question is, and that's what we're trying to achieve. The question is there another channel of that or a greater amount of that coming from what happened in March? We don't really see any evidence of that, but I think that's certainly in the back of my mind to see whether we do see that.
Yeah, it gets into the question about lags. How long are lags, Governor
12 to
Bailey?
18 months.
And do you expect to see more?
It's a very interesting question in terms of the transmission of our monetary policy decisions. So if I can just illustrate it with the UK case, and obviously it's not the only part of the transmission mechanism, let me be clear, but it's an important part, and illustrate it with the UK mortgage market. So we've seen a big structural change in the UK mortgage market since the last tightening cycle of monetary policy, which of course, accepting passage of time, was about 20 years ago actually. And that change has been a change from a variable rate mortgage market to a fixed rate mortgage market. Now, I must say, obviously with Jay here, it's not a US style fixed rate mortgage market. It's a much shorter term. So the average term is often around 5 years. But we know, and we think around about 85% of the stock of UK mortgages are now sort of in that part of the market. So we know that the transmission of monetary policy is going to be slower as a result, because obviously it depends upon the sort of the timing and the sequence of those fixed terms coming to an end often. So we have to judge that. I mean, it's another factor and another sort of element of uncertainty that we have to judge when we're taking our decisions, which is how much of the tightening that we've already done has come through and how much is yet to come through. And we know that referring back along quite a way into the past isn't going to help us in that respect. So we have to sort of formulate those views afresh. And so it is part of our decision-making calculus is how much more has to come through, when will it come through, and also how powerfully will it come through. And all those things are things we have to take into consideration. And as I said, history isn't going to be a great guide for that, given the change in the market.
So a year? What's a lag?
Well, what you see, and of course you can compute the profile of mortgages coming up for renewal, renewed terms, and we can see that over the next year or so, there's quite a lot of fixed rate mortgages are coming up for renewal. So we can factor that in. There is another element, I say, of uncertainty as to just how that will work its way through.
President Lagarde, how do you think about the lags?
I think of the lag in 3 steps, if you will. The first one is transmission in terms of tightening of the financing terms that are made available and how markets absorb the decisions that we make. And on that front, we have a good and reasonably rapid transmission. We see it in rates, we see it in volume of loans, and on both accounts, there is a good absorption and a rapid transmission of our monetary policy decision. But that's only step 1. What we need to see is step 2 and how it materializes on investment by corporate, and for households, it's predominantly mortgages. And for the euro area, there is a lot of heterogeneity, because you have markets where mortgages are at fixed rate, markets where mortgages are at floating rates, some that are readjusted every so many years. So we have to look at all those data very carefully. But it seems that the transmission is likely to be less rapid than it had been in the past, because there are many more fixed rate mortgages now in the euro area than there was, say, 15 years ago. And that's not it. We need to see it then channel to the third step, which is inflation. So we want to see that transmission strength through step 1, step 2, step 3, and make sure that this is really having an impact in terms of the fight we have against inflation.
Governor Ueda, do you worry about the impacts, the lagged impacts of their policies on the global economy and on your economy?
Oh yes, but for ourselves, we haven't had any serious monetary tightening for 3 decades. I was a board member of the BOJ 25 years ago. Then the policy rate was about 20, 30 basis points. Wow. Now, minus 10 basis points. So,
and it doesn't sound like it's changing anytime soon.
So in terms of that, the lag in the effects of monetary policy could be at least 25
put
years.
volume very high.
We'll see what will happen if we get to normalize policy seriously. But we'll have to be very careful here.
Be careful what you wish for, I guess. So, Chair Powell, are you more worried about the lag impacts than they are because they're still hiking rates?
I don't know. I wouldn't want to compare. I would just say again, so what's different this time is actually, though, that markets move substantially in anticipation of moves. So by the time we lifted off in March of 2022, the 2-year had moved from 20 basis points up to 200 basis points. So financial conditions now move in expectation, and the whole modern communication strategy really helps that along. So that is different. What may or may not be different, and we also haven't had this kind of tightening in 3 decades, really. We've had tightening, but it wasn't this looks more like tightening cycles from the 70s and 80s. So what we see is a picture of literature that has, the older literature says, a year or 2 for activity and add a year for inflation.
EU economic conference.
There's new literature that says it's
ECB
much faster
conference.
than that, and I think we just have to use our, to watch and see what's happening. There are beginning to be, there are reasons to argue that it would be faster this time or slower this time, but I just don't think we know at this stage.
Well, it kind of gets into the question about the markets, and you're saying that it's a transmission mechanism. You're all talking very hawkishly and saying there's more work to be done and we're still worried about inflation. The markets pretty much think you're almost done, all of you guys. Maybe one more hike in July and then done, and then into cuts next year. Is that wrong, President Lagarde?
You know, I look at the data we have, I look at the mandate we have, I look at, you know, the transmission lag, and we've decided for ourselves that we would use 3 criteria. That's what we are focused on. Of course, we are not completely oblivious to what happens in markets, but we have to be guided by what the mandate is, what the data delivers, and what criteria we take into account in order to determine our policy and to establish our stance going forward. That's the only way to go.
But I guess, you know, there's financial conditions, and I don't know, Governor Bailey, are they working against you? You're trying to fight inflation, and MSCI World is up nicely this year.
Well, by the way, I mean, the market, I don't think thinks we're nearly done at the moment. I mean, they've got a number of further increases priced in for us. My response to that will be, well, we'll see, because we are, as we were saying earlier, we're essentially evidence-driven in that sense. So, you know, we'll make our decisions based on that. I think you're right to point out, as you said earlier, and I would draw this point out, that there are 2 parts to this. There's where the peak is, and then how long it's sustained beyond that. And I think both of those are relevant. Both of those are things that will, I mean, sorry to state the blunt and the obvious, will emerge with time. But I've always been interested that the market thinks that the peak will be quite short-lived in a world where we're dealing with more persistent inflation.
Right. I mean, they did finally price out the cuts in the US a few weeks ago. Market was primed for cuts. I assume you were pleased to see that that's no longer the case.
So if you go back and look at forecasts from the participants on my committee on inflation, you'll see, you know, we've been consistently thinking this is going to take some time. It's going to be a process that will take longer than we would have hoped. And it may well be a bumpy process. But markets have gone back and forth between pricing and what appearing to price in pretty quick declines in inflation to coming back to being more in alignment with the thinking of the committee. And that's where we are right now, is closer to where committee participants are. But as Christine said, you know, we're not focused on what the market's forecast is. We have our forecast. All of us who are on the committee, we work hard to develop an understanding of what's driving inflation and what the path forward for inflation is. We make our best estimates. And that still is that it's going to take some time. It's just going to take some time. Inflation has proven to be more persistent than we expected, not less. And of course, if that day comes when that turns around, that'll be great. But we don't expect that. We don't plan for it.
So is it counterproductive to you that the stock market has rallied, the bond market has rallied? I mean, the market is fighting the Fed. The market thinks you're closer to the end. And I mean, that does make financial conditions easier.
Wasn't that the...
You can't fight the Fed, but they're fighting the Fed. Is that a problem for you?
I don't see it that way. I don't look at it that way at all. Honestly,
This woman
we have
is the
different
same.
jobs. You know,
She just works
our
for
job is to bring
BlackRock.
inflation down to 2% and sustain maximum employment. That's our job. That's what we think about. We look at the data, and that's what we care about.
BlackRock's tired of
Markets
buying
react, different
NVIDIA
parts of the market
400.
react in different ways. It's just not something that is a principal focus of our work.
But it did seem last year like you wanted a weaker stock market. You used the word pain at Jackson Hole. It seemed like you were trying to communicate that financial conditions should tighten, and less so this year. Is that right?
Not really, no.
Okay.
Of course, we work through financial conditions. That's what we do. Our rate and our, you know, all the things we do.
You guys are married? She's married to the
That's how it works.
head of
it's broader financial conditions. So we're not
Bloomberg
focused
US
on any one market.
programming.
We're never thinking, oh, let's do this to this market. It's just in general, let's communicate what we want to do, and why we want to do it, and financial conditions adjust, and that's really all we can do. We do not target particular parts of the market, although of course we do monitor market conditions.
So you don't care what the stock market's doing?
I look
she's
at
an
broader
anchor
financial
for
conditions. It's
CNBC?
one of
Yeah.
many conditions, along with interest rates, credit spreads, you know, everything, all of the conditions and the availability of credit. It's one of many things. Again, we don't We don't focus on any one thing as the key thing.
Governor Wada, how important is it to you, the markets, as it relates to financial conditions and the mechanism for monetary policy?
You mean the stock market?
Stocks, bonds, currency.
So stock prices have been rising fairly sharply.
This event, I don't think pays the
since
speakers.
spring this year.
Some of the private ones do.
Stock prices theoretically are affected by interest rates and investors' view of the economy. We haven't changed interest rate, so probably investors have become more optimistic about the future of the economy.
But no, investors are
we
driving
don't
into your
want
fucking market
serious
because they don't
financial
trust your
imbalances in
currency.
the economy. So we keep monitoring.
How do you think about, President Lagarde, the risks to the economy, especially geopolitical risks? You know, in Europe now we have this, we were all glued last weekend to the news out of Russia and the Wagner rebellion, and we're wondering if now political instability in Russia presents a further geopolitical risk to the global economy.
Well, I think I look at it, we all look at it, and we are all concerned about geopolitical development by virtue of the profession that we have, because it does have an impact on supply chain, it does have an impact on trade, it does have an impact on the uncertainty, and we can only say that at this point in time, uncertainty is high overall, and a big factor of that uncertainty has to do with the geopolitical difficulties and conflict or quasi-conflicts that abound at the moment. So yes, we are looking at that, but you know, do we have to make a moral judgment on this, that, or the other? This is not the job that we have, but it clearly has an impact on how the economy is going to change and be transformed, and whether it will have an impact that is inflationary or disinflationary, I think is also to be determined. I think there will be various schools of thought along those lines.
Yeah, I wonder how you think about next winter. I mean, Europe got lucky.
We hope it's mild.
What if it's not?
But storage is, what, 69%? Michael, the expert on Isabel's panel, said that 69%, and we are going to hit 95% by the end of the summer. So that should put us in a good position for the winter. But I'll say one thing, which probably we had not factored in sufficiently, and maybe that applies to all of us.
We hope global warming gets worse, is what she really
said. The resilience
said.
of the entrepreneur, the corporates, the way in which we have sort of, in a matter of a few months, reorganized ourselves. You know, just think 1 year back, everybody thought that the German model was dead, that Europe was going to be completely on its knees. Well, these things have not happened, and the resilience has been demonstrated at all levels of society.
I totally agree with Christine on this. That resilience, I mean, you see it when you talk to businesses. I spend a lot of time talking to businesses, and I've spent a lot of time in recent months talking to food-producing businesses to try to understand the sort of, the slower than, frankly, we expected decline in the rate of food inflation. And one of the things that I get quite consistently, and this is where sort of the Ukraine-Russia situation comes through for real, is they say, well, you know, last year we bought forward sort of supplies to a much greater extent than we would normally do because we were not confident we could actually get them. Consequence is we've locked in higher prices for, you know, sometimes they say 6 months to me. And that, of course, is affecting the, you know, the passage of inflation, particularly food prices in this case. So these things do have a very direct effect and are continuing to have a very direct effect, actually.
But there's nothing central bankers can do about that, is there?
Well, I think the first thing we need to do is understand it. That's a good starting point. Well, we have to then design.
You can always just keep crushing demand, but you can't do anything
Well, we
about
have
food
to
supply.
design policy. I mean, we have to design policy and, you know, take our decisions with the best. Yeah, we always take policy. You know, we always take policy decisions on a forward-looking basis. So we have to do it with the best information and understanding we can get of these things.
So do you still? So to what extent, I guess, is the war in Ukraine driving supply-side inflation for materials around the world?
Well, following on from what I was just saying, I think the conclusion I draw from that is, and this is what the businesses tell me, is yes, we are going to see actually a fall in the rate of food price inflation, for instance, but it is taking longer than we expected. So that's what we have to factor in and decide how best to, in a sense, to respond to that with monetary policy.
It's not just Russia. Governor Ueda also, we're following the tensions that have increased between the US and China, between Europe and China. Do you think that's having a material impact on global growth?
Well, at least there's a tendency to relocate production sites out of, say, China into other Asian economies, including, to some extent, Japan. So in the short run, this is having a small positive effect on the Japanese economy through business fixed investment. But in the longer run, there will be inefficiencies all over the place. So we'll see.
So Japan's a beneficiary of the flight out of China?
In one sense and in the short run, but in the long run, I'm not sure.
I mean, Chair Powell, how do you think about, it's obviously a risk and it hurts trade. How do you think about the US-China relationship as it impacts the economy?
So that is the way we think about it. Of course, we don't have any role to play in the relationships between the countries, but China's a very large, important economy. It's a big trading partner, mainly consisted of us buying things that are made in China. I don't think, and of course, the Chinese economy came out of the COVID and looked like it was recovering strongly. Now it doesn't look like that. It looks like it's slowed down, and there's some issues there. From the U.S. standpoint, at the margin, that probably means a little bit less global demand. I wouldn't say it's a first-order consideration for us, though.
How does Chair Powell referenced the disappointing nature of the Chinese economic recovery. How does that play into Europe's recovery or the global growth picture?
Well, first of all, I think we have to be attentive to the emerging market economies at large. At the moment, they are producing about 60% of global growth, some of which is now a bit more focused on domestic development and consumption, and less so on trade. But if you look at the trade volume numbers from China to many other countries, particularly the advanced economies, that has not changed significantly. So the trade volume is still significant. And I'm not breaking any news here. The Chinese authorities themselves say that they're likely to have a 5% growth this year in 23 rather than the 6% that they had initially forecasted. So that will have an impact, given the size of the Chinese economy, on global growth at large. We have to, when we do our projections, when we look at the economy, we look at the global economy, and then we sort of narrow down and zoom on the European economy and the euro area in particular. But everything that happens in China, in the United States, in the UK, in Japan, in emerging market economies actually matter for us because we are strongly interrelated and have been trading with each other for a long time. And if anything we've learned from COVID, in addition to the pain and suffering for many, is the fact that we are vastly dependent for the supply of rare earth and various metals that will be critical for the development of the economy of tomorrow if we decide to firmly go towards the green economy that we should be aiming for.
As an open economy, one of the things is just exactly as Christine says in terms of how we do our process. One of the things that we spend quite a bit of time on is world export prices. Now, actually, in the recovery from COVID, and of course this was the supply chain shock, we saw quite a big contribution to goods price inflation from world export prices. We're now seeing those prices definitely start to weaken. So that will be another determinant going forward of policy.
As central bankers, do you plan for the worst case scenarios on the geopolitical front? I mean, if China invades Taiwan, then what? What does a central banker do? Is there a contingency for that, Chair Powell?
We use our tools to achieve our legal mandates, if that happens.
Got that Fed speak down. You'll hold a special meeting. No, I mean, it's a volatile world we live in, right? And then
so
there's
we do
impacts.
have, in every FOMC cycle, we look at, our staff works up 6 or 7 or 8 alternative simulations, and they simulate different things. It's not so much geopolitical events, though. It's more different ways the economy could play out. And we all the participants read those and think about them and talk about them, and they come up in our meetings, we talk about them. So it's very helpful because you can't get too focused on the modal path in a world where it's just very hard to predict the economy, even in normal times, it's very hard to predict the economy, let alone times like today.
What sort of simulations do you talk about?
I'm going to leave that to your imagination.
I bet I can think of a few. President Lagarde, Chair Powell did talk about, I mean, one of the things that I don't know that there was a simulation of is we had a few bank failures in the US this year. And I know it forced some of you into action to shore up banking systems. Are we in good shape now? Is the global and European financial system in good shape? Have we healed?
I can only speak to the banks over which we have supervision, and those are the euro area, the European banks, but I'm looking at the euro area specifically. We have been, enforcing Basel III to the entire banking sector. The capital ratios are very high, 15.3% if I recall. The leverage coverage, the liquidity coverage ratio, very high as well. So we have not experienced the turmoil or the difficulties in Europe, and Europe does not include Switzerland. Thank you very much. But we are extremely attentive. We reinforce the stress testing constantly. We are I'm very pleased to see that the Basel III agreement has now been reached, as I understand, between Parliament, the Council, and the Commission, so that we can actually roll out Basel III with as limited exception as possible. And we have to continue doing that job.
Any lessons that you took, Governor Bailey, from what happened earlier this year?
Well, let me start with a sort of bit of backdrop. I think it's important, drawing on what Christine was saying, I think it's important to, in a sense, reflect the fact that the regulatory changes we made after the global financial crisis have paid off, in the sense that we've been through, and we are going through, some huge economic shocks. And the banking system, certainly I can speak again as Christine does, I can speak for the UK banking system, is resilient to them and is doing what we want it to do, which is support the economy, not the other way around, to be honest, going back to the crisis. So that's an important starting point. Now, I think there are important lessons from, important issues that we have to reflect on from what happened. Christine made her subtle reference to Switzerland. Well, there's a huge sense of irony in the British, Christine. Look, I mean, there is obviously a question posed by the Credit Suisse, handling, which is, are the resolution plans for the major banks that we've spent the last 15 years...
they've got like $1 billion, like $1.5 billion locked up at 4,400.
And well, come on to that. If they're not fit for purpose, then of course we cannot sit here and say all's fine, because clearly we're going to, regrettable though it would be after 15 years of work, we're going to have to sort of, tear them up and start again. Now, I'll give you my view.
721.
I'm going to say this. I have not yet heard the case made to me which suggests that they are not fit for purpose. I'm going to state that. But I'm not going to leave it there. We have got to have, we've got to have this out and decide whether, it goes one way or the other. My starting point is I remain to be convinced of that assertion, but we can't let it rest there. I think we've all got the question of, how our banking systems handle, a steep rise in interest rates. We do stress tests to test that. We've got capital provisions for, related to that. And we've all got to think hard. I think the third thing I'd say is we've got to think hard about the speed of run question. But I think we've got to think pretty carefully about that because, if we go to extremes on that argument, we're essentially heading to narrow banking. And speaking myself, I don't think that is a sensible place to head to. So we've got to think quite carefully, but quite, I think, creatively about how we maintain the banking system that does what we want it to do, which is create credit in the economy, create assets that are naturally illiquid, and deal with this speed of run question. And we've got to take that one on.
We're actually going to get stress tests this afternoon in the US, which I won't ask you about, Chair Powell, but I will ask if you think that the US regional banks are resilient right now.
I do. So I think, first of all, I think the overall banking system is strong and resilient with very high levels of capital and liquidity, double the levels that they were at, and then some before the crisis. So the innovations that we put in place, the regulatory changes and higher capital, those are all in place in the United States as well. So when it comes to the events we had earlier this year with 3 banks that had pretty idiosyncratic business models and funding models as well, I think we need to learn lessons, and we're not hiding from that at all. We understand there going to need to be regulatory strengthening of both regulatory and supervisory practices as it relates to institutions of that general size, I would say.
You got a lot of questions on that from Congress last week.
That's mostly what they wanted to talk about.
They want to make sure that you aren't, well, in part, not going to increase capital levels and sort of choke off the small and regional banks in this country and make it hard for them to compete.
So the U.S. has something like 4,500 banks. It's the most banks by a pretty big margin, I think, of any major economy. And we think it's a real benefit to have banks of different sizes and business models that serve local communities and offer different products, as well as having the large banks. And the large banks in the United States are very strong, well capitalized, a lot of liquidity. And they've been a source of strength, I think, through the last couple of events. So I think it's important
Then why did they all pile
whatever
into the
changes we do
backstop?
make, keep in mind the need to preserve the business models of these of smaller banks and not just of the largest banks.
Any concerns for you, Governor Ueda, on the strength of the global financial system at this point as we go through this, I don't know, once in several decades tightening period?
I can only talk about Japanese banks. I think they are well capitalized. They're capitalized. They have enough liquidity. It's true that some smaller banks, regional banks, are sitting on non-negligible amount of valuation losses on their security.
How wrong to be bearish?
But on average, that's about 1% of their core bond capital. So it would be okay. But if we do get to normalize our monetary policy, because we go into the 2% inflation rate equilibrium in the sense I discussed earlier, then rates may go up by large margins. And we will have to be careful. We'll have to be carrying out all sorts of stress tests, I think.
I also wanted to ask you, if you go into a more normalization stance away from negative rates and the yield curve control, how you'll manage the risk of the government's enormous financing needs, and whether that's a concern that you think
Will
about.
there be any pullback in this pump?
Well, we keep saying that it's the business of the
I don't think
government
so.
and the diet to
They have
create,
43.75 in the money
sustainable,
again.
government
So
finance.
4,400 is the target.
Fiscal policy in general, I'm curious if you guys will bite on this. Is it helpful right now or hurtful, President Lagarde?
Everybody has to do what everybody has to do. Man's got to do what a man's got to do. Monetary policy makers have to decide on monetary policy, and fiscal policy makers have to do their job. It is true that there are circumstances where working hand in hand and supporting each other has proved helpful. I think we had a very good demonstration this morning in one of the lectures that we had. I think what we have very clearly stated as a governing council of the whole Eurosystem is governments, please, it's time now to roll down the measures that you had decided for COVID and for energy purposes, and that you adopt a path that will take you to better sustainability of your public finance. So we hope to see that, the fiscal space that has been allowed for the various non-conventional fiscal support that were decided back in 22 and 23 very much should be rolled back in the course of 23 and certainly should not be expanded in 24, bearing another major shock. But that's our recommendation, and we make it very clear in our monetary policy statement, and have made it very clear in the last statement that we issued.
I mean, we learned in the UK, what was it last year, when monetary and fiscal policy don't work together, it can be a big problem.
Roughly
Well, because what we had to deal with
440.
in the UK last autumn was actually a financial stability issue, and we dealt with it, and it was very clear that that was the issue we dealt with. We didn't deal with anything more than that. It's not our job to get involved in fiscal policy in that sense. And we always, when setting monetary policy, take fiscal policy as announced, as a conditioning sort of assumption for our decisions. So I don't go beyond that in terms of commenting on the stance of fiscal policy. I mean, the one thing I've said in recent times, and I don't mind saying it again, is that I welcome the fact that the Chancellor is very much using fiscal policy to try to address the structural issues in the economy. That's not a comment about the stance of fiscal policy about more or less. It's a comment about the fact that, going back to the point I've made about labour markets, and actually the low potential rate of growth in the UK economy, that the more we can do to tackle that, frankly, the better.
What about you, Chair Powell? I mean, there's been a lot of fiscal largesse in the United States, the COVID stimulus, and now even new policies that are just filtering through, like Inflation Reduction Act, infrastructure, CHIPS. There's still American Rescue Plan Act money getting doled out. Isn't that making your life harder?
Well, so echoing my colleagues, our assignment is to deliver price stability kind of regardless of the stance of fiscal policy. And we don't play a role, formal or informal, in advising the fiscal authorities. There are other agencies in Washington that do that, and that's really not our job. I will add, though, without crossing any lines, that the spending during the pandemic was very high, and it's come down. And so we look at the fiscal impulse from the level of spending, and it's really not material. It may even be slightly contractionary, but let's just say it's flat. You identified those bills, and I think you are seeing some of that money showing up in construction. Construction numbers, it's supporting construction activities, particularly the infrastructure bill. But I wouldn't say that that's if you look at where the inflation is in the economy, I wouldn't say that that's an important driver of inflation or something that we think about or consider.
So you mentioned the consumer, so the excess savings you think have pretty much come down. Where do you think the U.S. consumer is headed?
The consumer had savings from two sources. One was just the fact that people couldn't travel and couldn't kind of spend money on services. That was a lot of it. And there were also the fiscal transfers that happened. And those, there are many different estimates. I would say for people at the lower end of the income spectrum who tend to have a high marginal propensity to consume, most but not all of that money is gone. So there's certainly some residual support for spending in laws that passed at the beginning and during the pandemic. But that's, again, I wouldn't say that's today the main driver. I think if you look at the strength of the labor market, still creating more jobs than there are new entrants to the labor market, and wages are still pretty high. So you're driving up disposable income, and that is driving consumption, and that's driving the economy.
Wanted to also ask you guys about the balance sheet, very hot topic. Governor Wade, how do you think about the expansion of the balance sheet, and how much is too much?
Well, it's a tough question to answer. At the moment, we are using government security purchases to.
Do you see the call chain filling between 43.75, 4,400?
We have set 0 plus minus 50 basis points. So the size of the balance sheet is
wasn't really paying attention to it.
The rest of you are kind of in shrink mode in the balance sheet, or roll-off mode. You've been
95 and 4,400 have increased interest.
Gone smoother than you expected?
85,
well, so far,
90 are still pretty weak.
Actually. By the way, the reason that you say more aggressive, just to be clear, is that we've got a longer duration.
43.95 and 43.60 are roughly even.
Bonds in our portfolio. So leaving it to an organic
43.55 and 4,400. 4,400 is a
That's
little
why you're
higher.
outright selling.
So that's why we're selling. And so
still very
the target
much
we set for
like
the year,
strangled,
the 80
right?
billion target was
Lots
the
of
sum
cheap out of the money strangles.
The natural runoff plus the difference between the target we set and that. And it's that element that we're doing as active sales. So that's gone, I would say, very smoothly, actually, so far. I'm very happy with the way it's gone. I think the second question that we're certainly looking at actively, of course, is just how far will we go and I look at it particularly in terms of the stock of reserves now in the system, before we hit what I would call the equilibrium level of reserves. Now, we may go on selling the QE stock below that because we would shift our operations around. I would expect to do that. But it's important to focus on where we think that sort of natural level of the balance sheet, which won't be constant over time, by the way, but where we think that
43, 50, 55 puts sold. That's
today.
ballsy. Some
How
of
do you
them
think about
maybe.
it?
They were selling.
Doesn't it look
They were selling them at
arbitrary?
that
And
level
is there pressure building
yesterday.
for you to go
But
faster?
I don't think
when it
all of
comes to
them are
losing
sold.
inflation?
I would say that the interest rate is the
I'd say there's
primary tool that
far
we're
too
using
much
at the moment.
volume in there for them to all be sold.
Second, there is
The
almost a
returns on selling
contractual,
those isn't very good though.
reduction of the balance sheet of the ECB because there is
You could
a
probably get a
reimbursement
glimpse of
the
that from
TLTRO
like the VIX
that
one
we have put
day.
in place during the pandemic, and that is actually happening now, if not yesterday or the day before. Third, as of the 1st of July, we will stop any reinvestment under the asset purchase program. So there is a natural
a decent amount
declining
sold.
of the balance sheet of the ECB, which is only, the
Although
first step.
VIX
We
one day
are
is starting to turn
discussing our
around.
operational framework. Hopefully, we will be able to complete that work in the next 6 to 9 months, and that will really determine the size, the desirable size of our balance sheet, which is always a factor of also the circumstances
Why are
and the
they
situation
criminals?
we're in. But that is coming.
Is it going smoother than you thought it would as well, Chair Powell, QT?
Say it's working as we had hoped and expected it would work. We have a entirely passive program. As treasuries and mortgage-backed securities mature, they roll off subject to a cap, and it's been moving along at a pace. The underlying pace, if you hit the cap, is about $1 trillion a year, and reserves appear to be quite ample. So it has a ways to go.
Is there anything that would make you speed that up or slow that down?
We always say that we're prepared to adjust in light of evolving conditions, but I don't see anything that would cause us to want to do that right now.
Okay, so in the moments that we had left, we've talked about a lot of the risks. We've talked a lot about some of the concerns out there. I want to hear some optimism, maybe, and what makes you feel. None of you are really talking doom and gloom on recession, but what makes you, President Lagarde, optimistic right now?
In my professional field?
However you want to interpret the question. Personally.
Otherwise, there are lots of things that make me happy, and I hope for all of you. I'll just mention one success, which I'm really proud of, and I'm very proud that Fabio Panetta was the one who led that exercise on behalf of the entire group. Today, the European Commission has published the legislative draft for the European digital, for the digital euro, for our CBDC. And that gives me hope because I think that it really demonstrates the capacity to innovate, the capacity to work as a team, the capacity to anticipate
they're
what
criminals.
digital payments will be tomorrow. Now, some people are very skeptical and they say, well, you're taking risk, financial stability, possible runs that will be accelerated by this. And all I would say is, number one, you have to be ready. You want to keep the sovereignty of your currency. So many years ago, who would have thought about all the users and the applications that you have on your cell phone? None of us. So being prepared, being ready, paying attention to what actually Europeans and particularly young Europeans want in terms of currency and form of currency is something that we have been doing, that we have accelerated, that we have not decided for sure, but at least the legislative piece is on the table. There will be a lot of discussion.
Thank you, Gherk. I'm a
And
bear,
that's, in a way,
but
also the
knowing that
result,
they are
one of the
trapped
good
at
benefit of
4,400
COVID. We
led
have
me to buy
talked about
calls
the
this morning,
downside of
and my
COVID and the
entire port just
consequences,
hit up
but the way in
100%.
which
Nice,
so many
dude.
of us have become more
Congratulations.
digital, better equipped, probably more productive. It will be demonstrated probably with a lag time. But when I look at my member states, the countries that were least digital have really traveled very fast to become much more digital. So that's a good reason to hope. And the resilience demonstrated, but I have mentioned that earlier on, by everybody, from the individuals to the entrepreneur to the corporates to governments. We, in Europe, decided to get together to borrow jointly despite the fact that it's laborious, that it's painful, that it gives a lot of things to report about to a journalist, is also a sign of progress.
And just to be clear, a digital euro will happen when?
That will be decided by the governors. In Governing Council, we will decide that at the end of October, and then there will be another phase of piloting, experimenting, fine-tuning.
Apple is going parabolic.
Because if and when we go, as
It's
will
up
be
like
decided by the Governing Council at large,
56%.
we want to get it right. So we're not going to do a half start or a fake start. We will move with success.
What makes you optimistic, Governor Bailey?
Well, actually, I'm going to build on Christine's theme because as well as we're also working on retail digital euro, we're actually also working on wholesale digital money and completely rebuilding our wholesale payment and settlement system in the Bank of England to enable what could be a complete revolution in the infrastructure of financial markets and trade finance. And this is very exciting. So we put the wiring in the weekend before last. The engine should go in next year, and this has enormous potential to change the world and at the wholesale level as well.
It's interesting, I feel like the world has moved on to AI beyond digital payments. Are you guys incorporating AI into your thinking about economies and your toolboxes?
I think we're all on a learning curve. I don't know, I feel quite old when it gets to this, but yes, I mean, we're looking at it in two respects, certainly. One is, three respects. One is how it will affect the economy. Two, how we can use it ourselves, both in our sort of, analytical
And you
functions,
thought she was
but
on
also
your
actually in
side.
our operational functions. We're looking at it, I would say, with very open eyes. You can see the strengths and you can see the current weaknesses of it. And of course, it moves very rapidly. So yes, we're having to, certainly I can speak for ourselves, we're having to devote quite a bit of time now to what the potential is for that.
Chair Powell, is AI one of the things that makes you optimistic?
So on AI, we're just doing what everyone else is doing. We're trying to get smart about it, and it's obviously has huge possibilities. Technologies tend to propagate through the economy fairly slowly, and this one may be the exception, maybe not, I don't know. But it's something that we're spending a lot of time on, way too early for conclusions. I wouldn't use optimism, but I would say this in answer to your first question, which is when inflation first arrives, it's really due to very strong demand for goods and goods pipelines that just aren't working and shortages. So that's where it comes from. It wasn't about the labor market at all, right? Or very much. As we get to this stage and to looking forward, we think it will be significantly about getting the labor market supply and demand back in alignment. I would say it's a positive thing, I'll say it that way. It's a constructive thing that we've been able to raise rates 500 basis points with the expectation of going further, and we still have a very strong labor market, but nonetheless one that is
asking people about AI who still have to ask their secretary to copy a Word document.
Things like lower job openings. Job openings are coming down. The quits level has returned to its pre-pandemic level. Wages have, if you look at employment compensation index or average hourly earnings, they've moved down about 1% towards more, still very high, but towards more, so a more sustainable level that's consistent with 2% inflation. So I would just say that's the makings of, if that process continues in a gradual way without really any effect on employment, the longer that goes on, the better. And in a way, I take that as a very constructive path. It is not guaranteed, but the fact that this is really there, and that's what's been happening for a year, well, more than a year into our tightening cycle, I would take as a positive thing and perhaps a hopeful one for the future.
Just be careful not to overdo it, right?
Right.
What about you, Governor Wayne?
Let's see. As other central banks are thinking of issuing digital monies, we are taking a different route.
I love how none of them are answering the AI question.
New currency bills starting next year.
You're going all in paper.
This will cheer up public's confidence in the BOJ. More seriously.
None of them know what AI means. I mean, neither does the general public, right?
As I said, wages have started to rise at 2% or so for the first time in 3 decades. More importantly, we are seeing as a sign of a change in inflation expectations, changes in price wage setting behavior of businesses. So previously, businesses hesitated to increase prices.
You didn't
because
say we
if they
don't use
did,
computers.
others will not follow
Fuck
suit.
your AI.
Now say they are raising wages, because if they didn't, they will have trouble recruiting workers, because others are raising wages. We think this is a good sign for us.
So the topic of Sintra of this ECBU forum is inflation, volatility. So now is prediction time. In 1 year, when hopefully I'll be invited back, President Lagarde, inflation rate in the UK is what?
Well, our last forecast, we expected inflation to come back to target towards the end of next year. We're going to start the next forecast in about 2 weeks' time.
I was trying to
Yeah, you
get
were
a
trying to
jump
get
on
further
that.
than that, yes.
Yeah, I was trying to
Nice
jump
try.
on that. Do you get to 2% by this time next year, President Lagarde?
You said a year from now, right?
Yes.
Okay, so the projection we have is 3% for next year. Headline.
Will you be satisfied with that?
I want it to be timely. We all want it to be timely.
Timely. Okay. Chair Powell?
I don't see us getting back to 2% this year or next year.
You don't?
No. I see us making progress, steady progress on, this is core inflation.
Yep.
Headline inflation is coming down now, is lower than core. But for core inflation, I don't see us getting to 2% this year or next year. I see us getting there the year after.
2025?
Yeah.
Core inflation 2%. So you're going to be restrictive for a long time.
No, well, we will be restrictive as long as we need to be. But, you know, if inflation is coming down sharply and we're confident that it's on a path to 2%, you know, that would be a different situation. You would begin to think about loosening policy, but we're a long way from that. That's not something we're thinking about now or in the near future.
Governor Ueda, are you going to get to the 2% by your measure?
So our projection as of April, inflation projection, has for 23 fiscal year, 1.8%, 1.8 headline, 2.0% for 24. Now, this makes my job of justifying underlying inflation rate staying below 2% a bit harder. But we keep saying that we don't have a lot of confidence in this 2024 forecast. This may change depending on the data to come out.
Do you guys feel you've been through a lot of hard moments, you know, COVID and the inflationary challenge, and now we're starting to see economies weaken. Do you feel like it's a particularly difficult point in your central bank journeys, Governor Bailey?
Yeah, until we get inflation back down to target, you know, we've got a very big job to do, and it's a job we have to do. Well, I don't know about stressful, but I think, you know, look, we sign up for this job, and you don't get to determine the conditions that you do it in. So we just got to do it. I mean, that's our job.
For you, President Lagarde?
Likewise. Man's got to do what a man's got to do. We signed up for the job, and a woman's got to do what a woman's got to do as well. Thank you.
Chair Powell? Haven't seen you stressed.
Sorry?
I haven't seen you stressed.
We have a job to do. We know that. We know that society's counting on us to do this job, and that it really matters. Price stability can matter for decades. It can benefit for people over time. I think we all know that, and we'll do the things that we need to do to restore it.
And Governor Ueda is feeling good.
I didn't know there was going to be so much traveling and so many press conferences.
Welcome to the world of central banking. Thank you all so much for taking the time today and all my questions. It was a pleasure. Thank you.
All right. So we got the test at 43.75 here. Give me a second. I'm just loading up some more data so you can get a better look at what's going on now. Okay, so this is a little bit of call interest accumulating to the upside. It's kind of weak. from 43.80 to 43.90. It picks up some strength after that. Those strangles might start to collapse now that the meeting's over. You know, the potential for any shocking statements is off the table. Net overall for all expirations. We're looking at is that updated? Yeah, a huge amount of gamma at 4,400. Jesus Christ. Significantly higher than the surrounding strikes. So yeah, let's see if that all starts to break down now with the meeting over. I think we can see that happen over the next little bit. But the expectation on any upside move here is 4,400. Yeah, for the rest of this week. That position is enormous. It's been trapped underwater for the last 6 days now. You know, they're gonna get it. Now what happens after they get it, that depends. Right? Obviously, you know, VIX is still really low. Put selling is not generating, you know, the amount of leverage that it was prior. And you know, we can see that fall off. But I think there's a lot of things in this whole discussion that we should probably talk about. So if you guys have questions on it, I guess gun it. She is a CNBC reporter. She's been around forever. Her name's Sarah something. She used to be on Bloomberg. Then she married the guy who runs US Bloomberg programming, and then she went on CNBC on some show. But she's fucking totally in the pocket of the hedge funds. Right. The same like all the other CNBC anchors. So, you know, still pushing that same narrative, although her approach in this meeting was interesting. Right? She kind of got them to, you know, she kind of got them to dismiss a lot of negative sentiment, and then, you know, towards the end tried to get them to speak on, you know, fund goals, basically, right? Like AI and, you know, digital banking and, you know, digital currencies. It seems like we got the most hawkish JPOW to date. Confirm my bias. I mean, it doesn't matter because the rate's not increasing, right? I mean, he's got to keep that narrative. Otherwise, the pause is really bad for maintaining inflation. I think the Japan angle's really interesting. Japan is historically very, very private about their, you know, their central banking. They don't, you know, they have conferences and they disclose what they need to for international financial standards, but coming out and doing public interviews and stuff is a bit rare. And there's a societally, there's a lot of, don't think that guy's an idiot or anything. He's not, you know, and it's not the language barrier. There's a lot of stigma around talking about their country's like finance on a public stage, right? And culturally it's actually like him showing up is a huge leap. What's your opinion on the negative rate the ECB had and the BOJ still has? Well, the BOJ, you know, they have they have a spread problem, right? Like, you know, their producer costs extremely high, while CPI is actually undercut, you know, everybody else's target. So they need to moderate their consumer pricing up and their producer pricing down. This puts immense strain on their currency, obviously, and leads to people that don't trust their currency fleeing to the stock market, right, for asset appreciation. And so you get this currency down, market up type scenario that you saw in Turkey for the last 2 years. Now Turkey's just moderated their central bank rate up, I think 8.5%. They plan to hit 30 pretty rapidly. That's gonna, you know, obviously bring their currency up a lot. You know, they don't yet have to peg to the dollar, but they may be close. But it's gonna drastically drop their markets. I haven't, moderator JPow, I haven't seen you stressed. JPow, that's because I smoke the devil's lettuce and go to Dead & Co shows. Yes, he does. Japanese are extremely reserved talking about finances, even on a business level. My equivalent level colleague in our Japan market hates talking business directly. Yeah. I've worked with the Japanese in the past a lot, and it's a very, you've really got to get used to there's so many cultural differences, especially surrounding business. That's why if you want to do business with traditional people from Japan, you have to have a meal or two before even discussing money. And even then, there's a whole etiquette. Yeah. Pausing was a mistake. Just prolonging the issue and allowing speculation to keep running rampant. No? JPal's stuck in between a rock and a hard place, right? Inflation is persistent. His only current benefit is that energy is down, right? And so, you know, he's trapped. I mean, kind of by their own doing, right? They trapped themselves by raising rates rapidly and but not doing it all at once. And you know, they also trapped themselves kind of even earlier by over capitalizing the banks and forcing, you know, banks to turn to, you know, what is now their duration risk in order to continue to maintain yields on that, on those huge depositor inflows, right? And so, you know, America's monetary policy over the last 3 years has led us to this position where, you know, if he goes higher and he really attacks inflation, banks are going to fail. There's going to be wealth destruction on an enormous scale. And, you know, all the cracks in the system become exposed. Even holding continues to pressure that, right? If he pulls back, then he allows inflation to run rampant. So, you know, the pause here is, you know, publicly they're doing very little, but beneath the surface, the effects are still substantial, right? You know, the longer they hold rates here, the longer those securities can't be marked to market, the more liquidity risk they present, right? And you know, the banks got that liquidity in March. They, you know, we see a huge chunk of it pumped into equities, right? That bolsters their balance sheets. It makes them look very robust and sound. But, you know, that the equities market has to maintain a rate of growth above the risk-free rate and above the premium on that risk-free rate to make that beneficial, right? So if they went, you know, to the Fed backstop or the Fed payday loan center, and got money, they need that money to beat that rate. And if it starts to not beat that rate, they've got to close that window. And you know, we've already started to see that window close. There's very, very little left. And you know, the way the market has been pumped. I mean, I think in this discussion we could ignore the broader market pricing because it's not really relevant to the discussion. Upside straddle got stopped out, same. When you're talking about the position at 4,400 that's underwater, you're insinuating we're likely to go up for the rest of the week till that's recaptured. I think there's going to be a concentrated effort to get those positions out from underwater. Don't forget that those positions aren't alone, right? You know, they're long, they're very long, 43.75, and this is shorter dated. Most of this expires on 6/30 and today. So that's those two expiries. And then 4,400, you know, we have today, and we have like the 7/21 expiry, right? In between all of this, you know, they have short puts. All the way down here to 43.50. Right? So yesterday, you know, they spent an enormous amount of capital driving themselves out of that hole back up to 43.75, only to have it largely reversed overnight, you know, back to the 40.65 level. And you know, now they've got to try to do it again. Meanwhile, the more they do it, the more the VIX drives down, right? And if you're getting your leverage from selling premium, but the effect of your selling premium lowers your return on premium, over time, you get less and less leverage. The 43.75 position is becoming unstable, and something that was, I think, kind of interesting about that position yesterday is they had a really good opportunity to close and roll it when we were up at 43.80, but not actually a lot changed. They closed some short puts that they'd sold, but their long calls that, you know, only have a couple days till expiration were still there. So they really, I think really they had a pretty high degree of confidence that they were going to continue the pump today. And if it weren't for the news last night, that would have been my expectation as well. But you know, then the Commerce Department came forward with shutting down the loopholes in the semiconductor exports to China. And that doesn't just affect U.S. exports to China. That's also anyone in Taiwan or South Korea using U.S. technology to manufacture chips can also not sell them to China. And so, you know, given how much AI is responsible for the pump in this market, the weighting of AMD, you know, Tesla, NVIDIA is very, very high, right? And not only the ETFs, but in the indexes themselves. And so, you know, a 2% drop across, you know, theirs, you know, we saw led to like, you know, a 30 basis point drop on ES going into this morning's open, and subsequently put the positions they'd put above water yesterday back underwater, right? And now they've got to dig themselves out of the hole again, but VIX is even lower. Right? So I don't know if they can get it to 4,400. I expect them to try. I would say that's my target. for the upside price action, but I don't know if they can pull it off in time, especially because you know the 43.75 positions are expiring, and Charm is going to start pulling back now too, right? There's only got 2 days left till expiration, so the positive hedge they're getting from that market maker is decaying alongside theta as that delta contracts, right? And so the stability of their position up to that test is breaking down, and they're trying to work against that. What's more interesting is they're not adding long-term positioning. They added a little bit yesterday, but nothing close to what we had last week on the test at 44.40. 44.48, I believe it was. Well, Charm, we're too far from the collar. If we're closer to the collar, Charm is going to have a greater effect. So, you know, and what's weird is technically it would have been more advantageous for them to let the market fall under the collar, let VIX spike, right? Wait for Charm on the collar to start to decay, and then use that momentum from the market maker to just rocket us up to 4,400, right? They did something similar on the last collar roll, but this time they didn't. And I think that's something that we should probably analyze in looking at how the rest of this week and next week is going to play out, because you have to ask yourself why take the less efficient path to the same target, right? So if the more efficient path is drop it below the collar and then let the market maker pump you up to 4,400, why try to fight the market maker pumping it up in advance? And I think part of it was obviously they were worried about what could be said this morning, right? Anytime you have a big economic forum like that, or you know, a public stage with monetary policy in the spotlight, things can be said that create volatility, right? And so getting their 43.75s in the money before any volatility occurred was very important to them yesterday. There's also, there's the stress test, but the stress test should already be done, right? We get the results of the stress test today. Too much risk on the sold puts. Yeah, I mean, I think what's kind of interesting there is that you'd expect them to close those sold puts as we fell last week, right? I don't think they can close the sold puts without risking a gamma slide. That makes sense. I think they started to close some last night, like in the last hour. Those big slips we saw. If you look at the time and sales, there was a lot of like out of the money put transactions going on there. I don't think they were bought, given the volume, especially not just the volume, the dates, but I do think they tried to claw some of it back. But yeah, I agree. It's pretty hard for them to get out of that positioning without something propping the market up for them. And now the bulls are a little more skittish, right? Because they all just bought the top at 44.40, expecting it to go higher, and then, you know, got buried, basically. Most of those positions were buried by the end of Friday, 2 weeks ago. If SPX fails, price target. I mean, I'm still looking to move under delta neutral before I get really bearish, right? I'm trying to keep all my positions relatively close to the money. I have some further dated put positions that are out of that range, but notionally they're less significant. So right now I'm still, you know, primarily just targeting that move to the downside move to, you know, like 4280, maybe 4250. If it falls below that, I might get a lot more bearish. But that range of between like gamma neutral and delta neutral, right? If they're gonna pump the market, this is, you know DN down here. If they're gonna pump the market, this is where it's most advantageous. Right, and so I really want that confirmation before adding. In the meantime, we're nowhere near there, right? We're in a positive gamma environment still. We didn't even break down below gamma neutral today. Not that we still can't, but we didn't. What are the two orange horizontal resistances? I think they're just support and resistances that I put up. I think one's 43.75, the other's 43.80. They're not significant in any way. They're just support and resistance. The 43.52 line right here. This is gamma neutral. I think fast gamma is just a little under that, like 43.52. It might be at the same level. 40, yeah, it's at the same level now. So 43.50, 43.52.50. Bears are more skittisher. Well, that's presuming a lot, right? What about bears that just came in at 44.40? They're not going to feel very skittish. They're going to feel super fucking confident. They've had a 300, 250 basis point move to the downside over the last week. There's a little relief rally here, but it's not been significant, right? So there's probably a lot of bears with some confidence. Now, yeah, leverage funds like net short ES have been in the pain trade for a long time. But I don't think they're going anywhere. They've been in the pain trade so long. I don't think they're leaving, right? They're like net short like a little over $1 trillion. They're not going anywhere. They're very confident in their position. If they were going to bail, they would have done it at, 4250, 4300, 4350, 4400. They didn't. I think they're just about out of leverage. Yeah, I mean, if they're selling the 4360 today, they're already in a lot of fucking trouble, right? I am the pain trade. If Mark Wahlberg were to buy a QQQ option today, which one would he buy? I don't know. The worst one? He's an idiot. Have you ever listened to that guy talk for more than like 25 minutes? The pumping has lost steam multiple times since March, yet always seems to get back on track. Well, liquidity kept coming in. But where's liquidity going to come from now, right? Now, in March, we're trading at local lows, right? When the backstop first opened. It's very easy to make a case for, we can take this money from the Fed at risk-free rate plus premium. We can put it in equities. We can drive equities higher. We can drive our underwater equities higher, right? And we can bolster our balance sheets sufficiently to cover the premium on the risk-free rate, right? That's not a case that sustains over time, though, right? Now, if they turn to the backstop and they get liquidity, where are they going to get the continued leverage? They've already driven VIX into the ground, right? Now, don't get me wrong. I could see them turning to the back, like other banks turning to the backstop with VIX higher and doing the same thing in 2 months, right? But they need that leverage from volatility, and they've effectively neutered it. And now they're in a position where they're shorting volatility to keep their volatility shorts from blowing up, right? That's a very fucking slippery slope. When this all started back in March, and we got that first really big fucking pump that just came out of nowhere, right? They were selling like $200 from spot, $300 from spot. Now it's 10, right? So that's compressed a lot, right? I mean, Marky Mark still has a hate crimes committed section on his Wikipedia page. Yeah. Do you think they're going to try to push higher for 43.90 to save the calls? I mean, if they can. Yeah. I think they need to. I saw 145 KOI on 430p for 630 on SPY. Sold? Probably. Yeah. They sold volumetrically today. They sold like I think it was down at like 42.65, 42.75. They sold like 20,000 options. I understand the mechanics of everything you're saying. I just don't see why they would take on that risk profile. I mean, in an instance like that, you have to assume because they need to. I mean, we know that duration is a risk. We know that floating rate is a risk. I think we've all seen more than enough data to establish where the majority of risk lies for larger and regional banks, right? And with duration risk in the bond market and continued depositor flight, that hasn't slowed down, by the way, which is something the Fed's mostly avoided talking about, but it did come up during the senatorial testimony by Jay Powell. Depositors are still not fully confident in the banking system. They're getting a little bit better, but it hasn't returned to the same levels it was at prior to the crisis. But the banks have equivalent capital, right, and liquid capital, and that's because equities are higher, right? So they've effectively offset their depositor outflow by bolstering their equity assets with largely using the Fed backstop, right? Well, this is the thesis. Both of those statements are true. Depositor outflow continues, and equity assets are up, right? not only are they true, it's advantageous for them, which is it wrong to think this thing will collapse regardless of whether or not this rescue mission is a success? Well, you know, at 4,400 plus, we did start to see some support come in, right? And we discussed this in the past. If they can get it high enough, then everybody has to abandon their thesis, right? They have to go, okay, this is just a bull market. I'm not going to fight it anymore, right? And if that point of capitulation had occurred, then those prices become stabilized and supported, right, in that range. And they don't need to pump anymore because everyone else is on your side. There's nothing to fight back against, right? And that started we just touched it. Like we started to see longer dated call positioning come in on SPX for like August and September. At like 4,500, 4,600, 5,000, and then it failed, right? And all of that call positioning that just gained a modicum of confidence fell off the chain. And that was with the breakdown of charm in the prior week. I'm still pretty comfortable with like my at the money put positions for July. But I'm also hedged against upside moves. So if you're not hedging and you're gonna just sit on a contract and let it decay while you wait for a correction, you need to either buy a lot of theta or you need to actively manage that position in some way. You can't just buy it and wait. That's not how fucking options work. They're dynamic. They need to be managed. Especially if you're going to take like a long-term position like that. Now is the risk reward worth it? That's up to you. To me, it is. I've traded a market crash before. I've traded steep corrections. They're extremely profitable, right? But the timing of them is very difficult. Some would say impossible. Do you think the second test of 4,400 level will inspire more confidence to come in? I think if they can do it in advance of any negative data coming out, right? So another reason for pumping earlier in the week is we have a lot of data that's not projected to be positive into the end of the week, right? And so yesterday they got some headwinds. Durables were doing a little better due to aircraft sales. Consumer confidence is up a little bit. Home sales and home prices are up, which means banks are pushing out more assets at the current very, very high interest rates, right? All of that's good for bank stability in the long run, and good for businesses, obviously, if consumer confidence is up. And so they took those headwinds and they leveraged them and they took advantage of them. And we didn't go any higher than 43.75, right? Now we're going into, we went in, we had the meeting this morning with the European Central Bank. Everyone's still hawkish globally, right? The narrative remains hawkish, so there's no hope for a shift there. The bond market's still not pricing in multiple rate hikes, and it's still pricing in rate cuts going into next year, which JPOW just said isn't going to happen. That doesn't mean the bond market's going to turn around and decide to price that in, right? They don't have to. but that doesn't mean that, like, the conditions are not going to change, right? And core inflation remains high. Then we have GDP, which is expected to start to slump as we move into the third quarter of this year. That's probably not going to be a positive. All the contraction that we've already seen in manufacturing and more defensive stocks, that's going to start rolling over to the retail side, right? Things will start to get cheaper because inventories are bloated. Jobs will get cut because they scaled up production to meet demand, and now that demand is falling off. And PCE is expected to remain stable at 0.4, and if it moves up, it's going to spike year over year. Right? We're going to stop getting contraction. And then all of this is still dependent on oil staying under like $70 a barrel. If oil stays up above $75 a barrel for a month or two, PCE or PPI and headline CPI are both going to increase. And then that'll be exacerbated by if we have a cold winter and natural gas prices go up. Right, so really, really all the Fed has going for it right now is the job market remains persistently strong and energy's pretty cheap. But energy prices are like one of the most volatile things in the market, and the job market is weakening, right? We already see indications in the non-seasonally adjusted and the seasonally adjusted data that indicate more and more people are losing their jobs and fewer people are finding new ones. And right, there's a lot of job availability, but a lot of those are all looking for one person, right? You might have 1.7 jobs per person, but you probably have about 30 jobs looking for one candidate that they somehow need to split between all of them. Like a lot of these are like white collar professional jobs that require experience, right? And so the pool of people available to fill those roles is very small, especially after COVID, when a lot of people in those positions took early retirement. Yeah, I know. I said it backwards. Fuck off. Do you believe in the lump of labor fallacy? Go on. I hear what you're saying and agree, but when NVIDIA 200? Well, Jensen can't smuggle chips into China anymore, so that should be interesting. I work white collar in engineering. I can't get these recruiters to stop calling and emailing us. I think soon we will all need to get promoted. I was like looking online the other day for like quantitative finance jobs, and like most of them require an MS in engineering, which I started but never finished. Now a lot of them are just paying for it. Like if you want to do that, they'll just pay you. They'll pay you to go to school, a salary, while you're getting your master's in financial engineering. Because there's fucking nobody, right? And more companies are starting to pay for, you know, professional degrees. How long till we have them starting to pay tuition for, you know, undergraduate degrees in order to fill these roles? It's only like 1/8 of the world population he can't sell chips to. NVIDIA to 1K. It's not about that. It's like what percentage of the world's cloud infrastructure is in China? It's pretty enormous, right? He can't sell chips to all of that. It's not the population, right? NVIDIA doesn't sell graphics cards to gamers anymore. They sell AI to people that are buying that. I don't know who those people are, but there's really not a lot of people in these fields. Civil engineering's pretty basic, yet we can barely get new grads at this point. I can't wait to get to my boss's level in 2 years. Well, you know, in the 70s, 80s, 90s, you grew up and, like, you know, your parents wanted you to be like a doctor or a lawyer or an engineer, right? And like even the early 2000s. And now it's like everyone, like 13-year-olds just want to be a star on TikTok, right? Like that looks like a way more enticing career path, right? And it's constantly spoon-fed to you through social media that, like, that's the way to go. So fucking why go to school? Why learn anything? You just do sensational shit on the internet. Now I want to be a star on TikTok, and yet here I am. There's nothing stopping you, popcorn trader. "13-year-olds, the backbone of the economy." I mean, they will be, right? 5 years isn't a long way off. And what do you do when they're not getting professional degrees? But the demand for people with professional degrees continues to increase. You're not going to replace them with a fucking chat bot, let me tell you. Not all of them. The children yearn for the mines. Look at Minecraft. Just do California Highway Patrol and collect 300K with overtime. Yeah, never pull anyone over, then you can't get shot. Smart. Then people with professional degrees become TikTok stars making videos showing people how to fake having professional degrees. Oh God, what have I done? You know that even the stupidest fucktards in the poorest chat could probably get a job at Fidelity as like an FA. I'm not kidding. It's actually frightening. That's like $120,000 a year job, depending on how well you can build your book. No, I can't. Well, not you, Ben, but it's not that fucking hard. The daily DD's pinned to the top of the chat. Dump into close. I work near a Fidelity office in Rhode Island, and they sure drive like morons. So yes, you're correct. So I see you have a fully funded 401k, and you're about to retire and transition into safer vehicles like bonds. But have you heard about CERN? I had a good question. Hi, everyone. Hi, Buckled Up Jen. How you doing? Everyone say hi to Buckled Up Jen. You think too much of us? Like us making $1,000 a day? I didn't think people made $1,000 a day. But like 100, I don't know, like 80, 100 an hour. Serious question for PyFi in the chat. What's a decent career now that won't be up against Chat GPT that we can get into? Bonus, they'll pay us to get educated and licensed. Well, you don't have to worry about Chat GPT unless your career goals involved operating and managing a drive-through. I hear Citadel is paying interns more than I make. It's like 100 something an hour, right? Welding. Yeah, there's always welding. Welding's a good job. You do underwater welding, you make like $1,500 a day. Might die, but you'd be happy most of the way there. What's up, Ending? Good morning. No, Chat GPT is stealing Wendy's. That's why so many people are worried about it. Dork. What's minimum wage? $500? How do people even live off $1,000 a day? I don't know. To be honest, 1K day trading is not that hard. It's not, but you have to have you have to have a pretty decent amount of capital already. That's hard to do. The being poor is self-propagating. The first 100K is the hardest. I would argue that the first 25,000 is the hardest. 25,000 to 100K is not that difficult. Going from like 5,000 to 25K, that's tough. Just fund your account with 25,000, problem solved. Exactly. What would you do with 25K for income in this clown market? Oh, fuck. Probably try to sell vol. But on shit where I wouldn't lose my ass. I've traded Upstart a bit over the last 2 weeks. It's been pretty good. Moderately safe above Gamma Max. Tesla's been all right. I still have some underwater spreads on it, but I'm not super worried about them. Spy and QQQ is not bad. Spy's shit though, because VIX is so low. Are Jimmy Bear spreads worth it? You have tight strikes. You don't have to take a lot of risk. I mean, you can get. You know what? They're actually not terrible. Those are pretty good. So 20% on risk. Fucking IV is abysmal though. Do you know Gamma Max for AI? I don't know if we track that one or not. I can look. Oh, we do. 45.17. I'm going from 5 to 25K over and over. It is tough. But I think I'm going to get there this time, finally. Then I need to make it to 100K to recover my losses from blown up ports and GME. If you can turn 5K into 25K, you shouldn't have too much of a problem turning 25K into 100. Careful with scaling. Don't take on additional risk just because you have more money until you're ready to. Seems like your long-term feelings haven't changed much. Not at all. If anything, I'm probably more bearish than I was a couple weeks ago, but leaning more into short-term chop ups as folks with lots of money are risking lots of money. I mean, yeah, more than that, I'm trying to highlight that, you know, there is upside, you know, because I feel like people get really caught up in the analysis, and even though it is a long-term analysis, right? And they position accordingly, but ignore current market conditions. And that seems like something that needs to shift fundamentally in this community, right? People need to understand, just because the market could go to, you know, 2,800 or 3,200 in the next, you know, 6 to 8 months, doesn't mean it can't go to 4,400 today, right? Trade small, trade often. That's more of a rule for day trading, but yeah. I took some profits on some of my puts on the recent downside move. More importantly, I got to close out a bunch of short straddle legs that I was just sitting on. So that was pretty beneficial. I had a lot of capital just sitting in those. So Gorg, I need 3,800 in 3 months. It's not out of the question. I mean, we have what, 2 weeks till the July meeting from the Fed. We have PCE and CPI in between there. Averaging down should not be the go-to, right? A lot of people like to do that because it's easier, right? It's easier than cutting the position or hedging it. But you know, averaging down, you know, when you average down, it's because you really haven't like hit risk, or you're just right at risk, and you're still very high confidence, right? That means that you have more confidence than when you entered the position. The position is gonna win. Oh no, did your short straddle legs fall asleep from sitting on them? A little bit, yeah, but then they were okay. But I had them at, you know, 43.50, 43.80, and 44.10, right? So I had a whole bunch of like fucking almost 100 contracts that were just dead. I bought theta on them, thankfully. So when we did reverse from the peak, you know, they went back in the money. And I made money on the call side, although some days not as much as I would have liked. Next Fed meeting is July 26th. Oh, 4 weeks? Okay. I was thinking it would be in the usual time frame. Usually it's right around the CPI print. Is it a week later because of the holiday? Any hope for downs today? I mean, it's kind of interesting that there's a shitload of out of the money calls, and we're not really going up yet, but I mean, we're at a level where they can just start buying them into the end of the day, and we'll see a 4,400 test by the end of the day if they do. How much can you average down? I mean, that depends on how much money you have and how much risk you're willing to take, right? Are August contracts still safe? I mean, I don't know where you have them positioned. The strike would be helpful. I have a couple deep underwater puts I'm looking to close, but down a reasonable less than 10% amount on the rest. Enough to close and reposition. Yeah, I mean that depends on your strike. 435. When did you weren't you up on those yesterday? $435 spy. That one's tough. I mean, you're pretty close to the money. Boring hour until Biden speaks on the economy at 1. Yeah, we have to watch that too. That'll be fun. I've been trying to hold them. First position I'm managing. Thanks for answering. Well, on a day like today, have you considered selling theta against them? Like selling a spread against it? Yeah, if you think we're gonna continue up into this afternoon, for instance, you could sell a spread there. Yeah, so if you guys are holding like a long-term put, right? Let's use your example since you brought it up. You have like a 4035 August 18, I assume. Put, right? And it's been chopping in and out of the money. And today, prices are going up. And you have some choices. And depending on your pricing on this, you may not want to cut it, right? Maybe you bought this when VIX was sub 13. Maybe you didn't, but maybe you did. Let's say you bought it in an ideal time and you want to hold on to this position and not cut it. On a day like today where prices are moving up, you can sell like a 40-40 put, right? Or you can sell 43 or 434, right? 436, right? But not for August, obviously, but like for today, like a 0 DTE or 1 DTE if you think it'll take a little longer to correct. You can scale this up, right? And then if prices drop, you and you sell out of the money, you limit your profit. If you sell closer to in the money, or closer to at the money, you take on less risk than you would on just the premium of the contract alone, right? What options levels need to sell spreads? I think it's 2. Some brokers let you do it with cash. Some don't. That I'm not too sure who allows what. I think Fidelity allows you to do spreads on a cash account. But it may only be on cash settled or cash settled options. So like XSP or SPX or VIX. But then you're collecting some premium, right? And that premium can offset the decay of your contract. It can offset, a move to the upside. There's a lot of flexibility there, right? If the market like starts rocketing, and it's headed for like 440, and you have, you have a 435 for August, right? You could even sell like an in the money put as it's moving up, right? Like 436 70, you know, you could sell like a 438, right? And then you capture some of that additional move to the upside as well. And then, you know, you can close it when it hits 440 or whatever on a rejection of 440. Any predictions on Tesla for this Friday? Short a 260C that I would rather not close in the money. I think we talked about this yesterday. What's Tesla at? Okay, so Tesla broke back above the 256 resistance as expected, but stayed under the 260. And you're short a 260C. Well, you have an option to hedge here. The trend is, I mean, it hasn't really broken through the trend yet. I was kind of waiting for it to get back into this range before I bought puts again. Maybe hold off, knowing that the market's going to at least move up today. But you could pick up a hedge, you know. That way, if it does move above 260 substantially, you're covered, right? You don't have to worry about it. Your identification of the bar for Netflix is pretty spot on. Do these happen often? Yes, they can. They take some time to play out. The certain volume like structures are more like higher probability, but yeah, they happen pretty often. The Netflix one was interesting because it had stalled at the breakout, right? And so that opened up potential for the price of the stock to move both ways. But whichever way it moves at that point, it's likely to make a large move, right? And there's ways to capture that, even if you don't know which way it's going to move. And that's kind of what I was trying to get people to figure out. That's why I kind of made like a game of it. Got any calls today for SPX? Yeah, I have my straddle and some 0DTs I picked up earlier. I'm just sitting in them. Same as yesterday. If longs are hoping to push higher and drive them to safety through short capitulation, I mean, the shorts are mostly capitulated, right? Like the week before last when we hit the peak. I mean, they blew out all the sold calls on the chain. They squeezed out the very last of the shorts that morning on Friday. Well, Thursday into Friday. So they weren't banking on short capitulation, right? They were banking on shorts flipping, right? They want the shorts to come in and support these levels, so they don't have to keep pumping and pumping and pumping, because you know, the returns on that are diminishing, right? And then if they don't come in and sustain these levels, then everything's going to collapse. And so far, they really haven't. Like institutions are not bullish. They're not coming in and going, I'm gonna buy this. You know, I'm gonna buy Nvidia at 410. I'm gonna buy Apple at all-time highs. There's no confidence there, right? And retail doesn't matter, right? Retail is fucking green candle, buy it, red candle, sell everything. Can you share Gamma Max for Tesla? Yeah, sure. Give me a second. Gamma Max on Tesla is at 298.52. Currently, I don't think Gamma Max is a consideration unless it starts to get closer to the money. That's not a lot of contempt for retail. It's just true, right? This is based on 100 years of research into retail investors. You see it in here every day. How could you think any differently? Market goes up 15 basis points. Everybody with puts freaks out. Market goes down 15 basis points. Everybody sells their calls. Why market crashing? Why market ripping? You know, they're very flighty because they don't have a lot of capital, and so, risk gets blown out very, very quickly. It's logical. Well, they just get to 43.90 and call it good. That would be super fucking bearish. If they pump it up to 43.90 and close the 4,400 calls, that's very bearish. That means that the bulls that bought those calls in the first place no longer have any confidence that they're going to go back in the money. Volvo will be using Tesla charging. Yeah, they're going to be like the SEA standard. There was already a report about it yesterday. They're going to be the SEA standard for like the next 3 years while they work on a universal standard. Which probably just means they'll be the standard forever, right? They don't make a lot of money off of being the charging standard. They don't make a lot of money off of charging cars. They're not a electricity provider, right? So very little money to be made on being the middleman there. And they have competition. And they'll have more of it too. Come on, what kind of talk is that? There's no way they hit 43.90 and just say everything's good. We'll sacrifice $1 billion. Well, it's not $1 billion if they hit 43.90, right? There's 721 calls. There's 721 calls that came in when SPX was trading at like 43.50 the last like 2 weeks ago, right? So 43.90, they're not at break even, but they're close. And it's not like that's not happened before. I mean, not every position's a winner. Even if you can do a lot to influence it winning. So, I mean, yeah, I agree. They're going to try to get them in the money, but that doesn't mean, it doesn't guarantee their success. What do you see foresee proper downs again? I mean, we'll find out what happens after the test at 4,400, right? Right now, there's not a lot of call buying going on above that. There's a little bit, but not a lot. If that picks up, day by day, we'll just reanalyze it. They could capitulate completely, and the market could fall right back to the collar. It could fall under the collar. Then into the collar roll, they could pump it again, right? Let VIX fucking run wild. But I don't think they can do that because of all the sold puts. I think if they let it fall and it drops below the collar and VIX spikes, they're just fucked on everything from 4,300 down to like 4,150 that they've been selling for the last month. VIX up, market up, re. What would be your upper PT limit for Fubo? I mean, I don't know how the market's going to price it, but I think if they complete their path to profitability by, 2025, then it should be worth about $7 to $8 a share, which is, I mean, significant compared to the current price, right? That's a 400% increase. There's some short position on it. It's been very volatile in the past. It could see price appreciation far beyond its actual value, right? I think there's a potential for a buyout there, especially if they achieve profitability early. Theoretically, what's their best play to unwind the current VIX lows? You keep it in this price range until the short puts expire, or incrementally buy them back slowly while we're trading in upper ranges and reduce exposure. Those are probably the best two ways. I mean, obviously, support coming in helps them a lot, right? That allows them to start closing out that positioning without the market sliding. We probably chop here till 12:25, 30, drop down to test EMA after it rises up, and then continue on our path. Bond yield's taking a bit of a poopy today. Yeah, the 2-year is getting some interest today too. $43.90 failed, but that, yeah, I mean, it failed just now, but that's probably just profit taking, and a small amount of it, I would say. It's not like a huge position dumped here. Are your 3x ETF calls a degen play, or is that something you think is going to print hard? I mean, most of it's still up, even after yesterday. I bought a lot of it like right before the peak and at the peak, a couple weeks ago. So they're right at the money. I don't think they're not really that degenerate. The amount of leverage I have is kind of degenerate, but like my SQQQ 20s are up a little bit still. I think my SPXS like 15s and 16s are up, but 17 and 18 and 19 are down. But yeah, I mean, like a drop to like 4,300 or 4,250, and I'd probably close the entirety of the position, or at least most of it. Could we see some downs tomorrow after today's mini pump? I mean, maybe we have some data coming in tomorrow. We have what do we have tomorrow? We have GDP. We had the stress test today at 4:30. Powell's speaking again tomorrow or tonight at like 2:30 a.m. Then we have GDP, jobless claims, like core quarter over quarter, GDP sales quarter over quarter, PCE pricing quarter over quarter. Then we have pending home sales, and then some auctions and stuff. And I think Bostic speaks later in the afternoon. JPEG gonna crash the market overnight? I don't know. I don't know what he's gonna be speaking on. QQQ 360 end of week. You know, if the market failed to test 4,400 today, and we close closer to the mid range, like sub 43.75, maybe. I don't think that's gonna happen, but then I might consider that. I'm not really a big fan of that position though, especially not targeting this week. This could only have one outcome. Either I lose my port slowly over the next couple of months, or I lose my port spectacularly in a few weeks. You know, Russell, my jimmies, you can not do that. Do you know if today's bank stress tests were the surprise tests, or were they being telegraphed ahead of time? I'm not sure. I mean these should be telegraphed well ahead of time. The bank should be informed and told when they're going to occur. I know that they'd mentioned another type of stress test that had new parameters that they wanted to do as a surprise, or one of the Fed vice presidents said that, or was proposing something like that. I don't know if that's something that's happening yet, though. I'm not even sure that that information would be made available to the public if it did. And the bank's representatives, I mean, the Senate and Congress, House, they didn't like the idea of that. Seems like Jip has a light track record of crashing the market. Jackson Hole, what else? I mean, the June rate increase, the August rate increase, and Jackson Hole. Like, they're gonna include regional banks this time? Those don't. I don't think those are in a position to be stress tested. They don't need to, right? They only really care about stress testing the banks that qualify for, like, or have to follow like Basel III requirements. So stress tests aren't like the epic 2004 movie Catch That Kid, where JPEG gets his grandkids to rob the banks to prove they aren't resilient. No. How bearish is the rejection off 43.90? They're decent. We got a continuation on it, so that's very good. VIX turned up a little bit there. Still really need to go lower to confirm any kind of actual bearishness. Nvidia doing a sad. Good. Fuck that thing. Jensen Huang getting tired? Propping up the SPX all by himself? Probably. Someone is selling a lot of Nvidia. Good. Quirk, someone is buying a lot of Nvidia. It's part of it. The stress test is when Zell stops working and people ask the bank where their money is. I keep buying $25 SQQQ calls. I mean, if you have enough theta on them, it's not a terrible price target. Although, on SQQQ, the closer to the money you can get, generally the better. Calls dump there? I need a second. Oh, interesting. Hold on. It's a little hard to tell right now because the term structure of the levels we're looking at here is all over the place. I don't really see a decrease in gamma at 4,400. Or maybe an increase in gamma at 4,400? Someone's selling it? There's not a lot of support below 43.75. Huh. Jay Fresh, are you on? Are you on right now? Is there any way you can figure out the rate of decay? Like, can you find me the charm on 43.75 for this Friday's expiration? And I'll give you the reasoning. I think maybe they're not getting it up fast enough to perform. Yeah, like erectile dysfunction for stocks. Are you talking to my wife again? No, I swear. Washington beef. He's busy posting rare footage of Jensen Huang renaming chips to smuggle them into China. I got a breakdown below 43.75 here seems really, really bad for them. I guess 43.70 would be the confirmation, but that's... If there's one more leg of like continuation here, that's really bad. Does VXX do anything besides drop? In theory, we should get a huge rubber band snap effect and blast when everything breaks. Or if the market crash, VXX crash. I feel regarded holding. Yeah, I don't know why you're holding a leverage VIX product when VIX has been nosediving. But, isn't VXX like the... It's an ETN, first of all. It's continuously rolling. So you know when VIX rolls, VXX suffers, right? And it's based off the S&P 500 short-term futures index total return. So it's long the front and next month contracts. So divide the delta by days to expiry, multiply by 100 OI, and price of spot. Fine. I don't have the delta. Do we have the delta in the data? Like the cumulative delta for the strike? That's why I was asking you. So I'm not sure if we have that. Sometimes I imagine we're in a college setting and you're lecturing in a hall and chat is all spoken comments. When I imagine half of your class responding, "That's what she said," it makes me smile. QQQ is continuing to sell off here. Huh. This looks like it's getting more bearish. You like those 360 QQQ puts end of week now? I mean, still not yet. Still risky. Like, NQ is still above 150, right? You'd probably want to confirm the breakdown. Am I shadow banned? I don't think so, because you just asked me if you were and I saw it. Is your comment being blocked because of whatever arbitrary reason YouTube blocks comments? Did you get NVIDIA on the screen? I mean, I can look at NVIDIA instead of QQQ. I still have sold calls on Jamie. I do have to watch it. And I'm not keeping it on my other screen. 1.8 billion of hedge lost per day until Friday. Thank you, JFresh. That seems significant. Oh, fuck. Are you out of your lily puts? Except for like some September. I have like some September 440s. I would have some July 420. Yeah. I know they're backwards. It seems really bad for them to let the market slip under 43.75. Does the lack of VIX action surprise you? No, they're trying to stop the market from falling. They're doing it by selling even more at the like near the money puts. Fucking genius. What do we need to see to further confirm upside price action into the day? Into the end of the day. I mean, they need to find stability here, and they need to start ramping up the call volume at 43, 80, and 85. It's probably just some algo going hard. That algo really doesn't care about tail risk. Can this circus end already? Thanks for always sharing your knowledge. Like the stream, it costs nothing, and who knows, maybe it is the catalyst for our market crash. Thanks, None with Guns. Current gamma hedging is around 2.6 billion right now, so charm is significant, but I would say still just an amplifier of gamma. I just wondered because it's such a large position at that strike with so little time to expiry. And they don't seem to be taking profit on it at all. This is all just for the 43.75 strike. That's insane, right? Jesus fucking Christ. That's some desperate shit. Fucking 2 DTE. I wouldn't enter that position. Oh. Uh-oh. Someone spilled their SpaghettiOs. Do I get both sides of my straddle to print today? No. How close to a rug are we? If this was a rug pull scenario, I would say that the rug was greased in butter. We're standing on it, naked, barefoot, and covered in water, and Ryan Cohen is holding the end. But nothing's happened yet. There's vomited SpaghettiOs all over my puts. So SPX 4500 end of day. You want to buy a call right now? Huh? If we lose 4370, that's really bad. I think I got stopped out on this drop. Like and not at the best spot, but it's fine. It was a market order. I got kind of a shitty fill. I had 43.75s though, so I didn't make very much money. The straddle was okay though. The zero DTs kind of sucked. You say really bad, I say really good. Tomato, tomato. Hasn't broken 4370 yet. But it might. Oh fuck. All the calls closed. Peener. Well, the like, I'll be more specific. The 40, 43, like 85 and 90s closed at 95s. 43.75 is still very much ridiculous. But so are 43.60 puts. Bears. There's bears. There's actual bears. Rar. I don't believe you. I don't believe me. Someone doesn't look happy about them selling puts at 43.60. I'm not sure if the 44. I don't think the 4400's closed. Some of them did. The zero DTE ones did largely, but the 721 interest is still there. You know, Dork, at the end of our movie about us predicting a market crash and the collapse of the US economic system, I think my favorite part is going to be like at the end when they like when they do that introduction thing, but at the end of the movie, you know, where like all the participants are like named and how much money they made off the crash. Yeah. Yours is gonna be like it's gonna be like $1,300, but then it's gonna be like plus 13,000%. And if they want the rights to the movie, they're gonna have to agree to that. Like mine will be like 2 million plus 8 to 12%. JFresh will be like 30,000 plus, 200%. Yours will be like $1,300, 13,000%. And it's gonna be epic. We're getting $600 off the market crash and use the money to buy Baconators. I love getting overly bearish on 18 BPS drops. JFresh will still be down on his bonds. Yeah. PyPy still streams for his 700 dedicated watchers after making billions and opened up a physical pickle financials offices around the country. I would never do that. That sounds awful. You just want to hang out in an office building while you watch the stream. After proving himself in the market, Dirk has made his next big bet in the markets. Tootsie Roll. Oh, like when they talk about Burry buying water rights. Popcorn Trader made $75,000 on the crash, which was almost enough to offset the 100K lost in betting on the crash since May. You didn't bet $100,000 on the market crash since May. $4,370 is really important. There's not a lot of anything under this except short puts and puts. Short and long puts. Greg only plays yes/no contracts now on BTC, and the answer is always no. No, I'll set up a market maker slash hedge fund operation and then spend all my free time trying to put Kenny out of business. Just let me be your wholesaler. Biden's going to come out and say everything is fine with the market. What happens if there's an active market crash while he's doing this? Oh, this is getting really awkward. When bear song? We're not even at fucking gamma neutral yet, man. But we're close. Don't you dare play the bear song? Bear song at the bottom? Yeah, I don't. It's not an intraday low, but we did get back to the intraday low very, very quickly. Also, VIX doing things. You see the VIX? What happens when the VIX goes above 14 and you've sold $35 billion worth of short puts at VIX 13? Hmm. They call that hedgies or fuck. That's okay. There's zero DTE. The primes aren't regulating your margin. You deal with it later. Well, primes aren't going to regulate margin requirements on delta moves under 1%, right? And but IR is a whole nother story. Sorry, 1 second. I'm just doing something here. Okay. I think that's good. How much of this is just NVIDIA having a single red day? Well, NVIDIA's like, what, 7% of the S&P weight? So, not all of it. Also, NVIDIA started selling off at the same time as the broader market. I like this cast. It makes me not snooze. It's fun. Fair, but they don't have the equipment to do it intraday. Who? There's intraday margin requirements. OPEC is having a meeting and keeping Bloomberg and Wall Street Journal out. And Reuters. Yeah, I'll pull up the Biden speech. We should probably watch it because he's talking about the economy directly.
Of Danny Davis. Danny, you've been a good friend for a long time. He's always there. And to all the elected officials, member of Congress, elected officials here today, thank you. Thank you for the welcome, and welcome me to Chicago. You know, first quarter of the 20th century, the poet Carl Sandburg described Chicago as a city of big shoulders. A city of big shoulders. He was describing the big shoulders of a working class American town who were building this city. At the same time, building the middle class. I'm here in Chicago today for the first quarter of the 21st century to talk about the economic vision for this country. The economy that grows the economy from the middle out and the bottom up instead of just the top down. When that happens, everybody does well. The wealthy still do it, everybody does well. The poor have a ladder up.
What the fuck are Bidenomics?
We all do well. This vision is a fundamental break from the economic theory that has failed America's middle class for decades now. It's called trickle-down economics, fundamental economics, trickle down. The idea was, it's belief that we should cut taxes for the wealthy and big corporations. And I know something about big corporations. There's more corporations in Delaware incorporated than every other state in the union combined. I want them to do well, but I'm tired of waiting for the trickle down. It doesn't come very quickly. Not much trickle down at my dad's kitchen table growing up. And it's a belief that we should shrink public investment in infrastructure and public education, shrink it. That we should let good jobs get shipped overseas, and we actually have a tax policy that encourages them to go overseas to save money.
So you're going to announce more
taxes? We should let
taxes?
big corporations amass more power while making it harder to join a union. I meant what I said when I said I'm going to be the most pro-union president in American history, and I make no apologies for it.
Work emergency sing. Just came back to my 4390 calls.
My predecessor, if my mom were here, God bless her.
Any chance for a Viagra-ish amount of calls to come in for 4,400 to test, or does data indicate they're tapping out on that
for the wealthy.
Thanks for 19 months.
And an estimated cost of his tax
listening to all your wisdom.
$2 trillion.
Slipping 4370 is very bad for the call side. They lost a lot of ground at the 4375.
Trillions. Folks, let me say it as clearly as I can.
Missed the peak there.
Trickle-down approach failed
I don't know if it's worth.
It failed America.
Waiting on
it
a
blew up the
bounce,
deficit. It increased inequity, and it weakened our infrastructure. It stripped
doesn't look good right
dignity,
now.
pride, and hope out of communities, one after another, particularly through the Midwest, Western Pennsylvania, heading west. People working as hard as ever couldn't get ahead because it's harder to buy a home, pay for college education, start a business, retire with dignity. The first time in a generation, the path of the middle class seemed out of reach. And I don't think it's hyperbole, I think it's a fact, no matter whether you're a Democrat, Republican, or Independent. I knew we couldn't go back to the same failed policies when I ran. So I came into office determined to change the economic direction of this country. to move from trickle-down economics to what everyone on Wall Street Journal and Financial Times began to call Bidenomics. I didn't come up with the name. I really didn't. I now claim it, but they're the ones that used it first. I got asked by a press person this morning, getting on the helicopter in Washington, why, when I asked you about Bidenomics a long time ago, you said you didn't know what it was. I said, I didn't name it Bidenomics. I didn't realize the Economist and the Wall Street Journal did. But I think it's a plan that I'm happy to call Bidenomics.
No way you fucking gets any movement on this.
And guess what? Bidenomics is working. When I took office, the pandemic was raging and our economy was reeling. Supply chains were broken, millions of people unemployed, hundreds of thousands of small businesses on the verge of closing after so many had already closed. Literally hundreds of thousands on the verge of closing. Today, the U.S. has the highest economic growth rate, leading the world economies since the pandemic, the highest in the world. As Dick said, with his help, we created 13.4 million new jobs, more jobs in 2 years than any president has ever made in 4, in 2. And folks, it's no accident. That's Bidenomics in action. Bidenomics is about building an economy from the middle out and the bottom up, not the top down. And there are 3 fundamental changes that we decided to make with the help of the Congress. We've been able to do it. First, making smart investments in America. Second, educating and empowering American workers to grow the middle class. And third, promoting competition to lower costs to help small businesses. Here's what I mean by all this. Under trickle-down economics, it didn't matter whether you made things as long as you helped the company's bottom line. Even if that meant seeing jobs and industries go overseas for cheaper labor. Supply chains and key products moved overseas, like China and much of Asia. The entire towns and communities, from where I live all the way out there and through the Midwest, were shut down, hollowed out. I mean, literally hollowed out. All over the country, parents have to say to their, many of you, all elected officials, heard people tell you this, had to say to their children, honey,
Joby.
I lost my job. We can't live here anymore. We got to move. Trickle down also meant slashing public investment on things that help drive long-term growth and helped America lead the world in innovation. We used to invest 2% of our gross domestic product in research and development. By the time I came to office, that was down to 0.7%. We used to be #1 in the world in research and development. That's what we're known for. Now we rank #9 in the world. China decades ago was #8 in the world. Now it's #2 in the world. And other nations are closing in fast. We used to have the best infrastructure in the world, roads, bridges, etc. But then we fell to rated 13th best investment in infrastructure. 2 to 13. How can you have the best economy in the world without the best infrastructure in the world? How do you get product from one place to another? I was out in Pittsburgh recently, the city of bridges. Bridges collapsing all over the nation. You've seen on television, railroad bridges collapsing. Bidenomics, we're turning this around. We're supporting targeted investments. We're strengthening America's economic security, our national security, our energy security, and our climate security. I designed and we signed a bipartisan infrastructure law. It's already announced, and I heard some of the speakers before touting some of it. It's already announced 35,000 projects across the country. Think of it this way. Nearly a century ago, Franklin Roosevelt's Rural Electrification Act, rural electrification, brought electricity to millions of Americans in rural America. 70 years ago, Dwight Eisenhower launched the Interstate Highway System, the largest infrastructure project to date in history. That's what the bipartisan infrastructure law does. It will be for our kids and grandkids, only bigger. Just last week, we announced our plan to bring affordable high-speed internet to end a decade of unaffordable and inaccessible internet to every home in America, every small business in America. And to no one's surprise, it's bringing along some converts. People strenuously opposed, voting against it when we had this going on. This was going to bankrupt America. Well, there's a guy named Tuberville senator from Alabama, who announced that he strongly opposed the legislation. Now he's hailing its passage. Here's what he said, quote, "It's great to see Alabama receive critical funds to boost ongoing broadband efforts." We're replacing every single lead pipe in this country and putting our children's health back directly. 400,000 schools.
Jesus.
10 million homes. We're fixing crumbling bridges, upgrading our power grid, renovating our airports and ports. And Dick, one of you talked about that, how important that is for the Great Lakes as well. Last week, we opened
getting excited.
I-95 back where I live. And you go up the East Coast. It's one of the most important links in the entire East Coast. Well, guess what? A guy driving a truck hit he knocked down a whole bridge and the whole block, 4 lanes of the highway. I went up there. I said, we're going to get this the #1 project to get done. Within 1 week of my being there, 2 weeks of happening, tanker trucks that crashed and caused this overpass that has 150,000 vehicles travel on it every day and 14,000 trucks. It's critical to our economy. We did it with union workers. We closed all the loopholes. We used all American products, all American materials. We used federal infrastructure projects. And made in America. Made in America, not a slogan. It's actually happening. You know, when Roosevelt passed the legislation in the 30s about unions being able to be engaged, everybody thinks they just legalize unions. It said we should encourage unions. There was a little provision there that very few presidents paid attention to. It said, buy American. That meant that if a president was given money by the Congress to build, say, a new deck in an aircraft carrier, whatever it was, he or she was supposed to use 100% American labor and 100% American products. It hardly happened. They get exceptions down to 30%, et cetera. I changed all that. We're all now investing in key industries of the future, making targeted investments to promote domestic production of semiconductors, batteries, electric cars, clean energy. Under the trickle-down economic theory was that public investment would discourage private investment. Give me a break. We went to see a whole lot of major corporations said, are you more or less likely to invest if the government invests? Overwhelmingly, they had it backwards. They said, no, we're more likely to invest if the government invests. Public investment declined here at home. Industries that we invented started to move overseas, like semiconductors. I want to remind you, America invented these chips, small computer chips the size of the tip of your finger that affect nearly everything in your life. From whether your cell phone functions, your automobiles can be built, refrigerators work, it goes on, into sophisticated weapon systems. It's all in that little, without that computer chip, we got a real problem. But over time, we went from producing 40% of those world chips down to 10%. Not anymore. Biden economics means industries of the future are going to grow right here at home. At home. I mean it. Not a joke. Under Bidenomics, we've already had over $490 billion in private investment commitments. $490 billion from U.S. companies and companies around the world coming to the United States of America. Working with our global partners, Americans' investments in clean energy technology are going to reduce carbon emissions, continue to lower the cost of wind. You talked about the wind farms you're talking about. You know, it's already cheaper. Wind and solar are already significantly cheaper than coal and oil. You're not going to see anybody building a new coal-fired plant in America. Not just because I pass a law to say that. It's too expensive. It doesn't work anymore. Solar power is not just here, but around the world. And we used to be the center of building these solar plants.
I don't care.
We're coming back and doing it again. America's going to lead again.
American coal usage anyway.
It's a win for the United States and a win for the world. the bills on my decision to rejoin the Paris Climate Agreement on the first day I came to office. The first day.
I'll talk about it.
By the way, my predecessor talked a lot about increasing manufacturing. Remember Infrastructure Week? Infrastructure Week became Infrastructure Week and week and week and week and week. It never happened. We got Infrastructure Decade done right off the bat. But in reality, construction of manufacturing facilities here on U.S. soil grew only 2% on my predecessor's watch. In 4 years, 2%. On my watch, it's grown nearly 100% in 2 years. 100%.
Yeah, his volume, I can't say anything.
Help
His
of all the
volume
members of
keeps
Congress
like
here, and I'm
fluctuating.
not being solicitous. Look, Weirton, West Virginia, used to where a steel mill closed in the beginning of this century, in 2001 or 2 in that range. It employed thousands, had thousands of good paying jobs. They were lost. But today, with the help of the Inflation Reduction Act, a new plant's being built, building iron air batteries, which are going to help store energy. And these batteries are going to help store energy. And it's being built on the same exact site, bringing back 750 good paying jobs, bringing back a sense of pride and hope for the future for all the people of Weirton and surrounding areas. I believe every American willing to work hard should be able to say where they grew up and stay where they grew up. That's Bidenomics. You know, my dad used to have an expression, Joey, and I give my word, as we say. My dad was a well-read guy, never got to go to college, and a hard-working gentleman. We had dinner where we incidentally had conversation and incidentally ate. My dad used to say, remember, a job's about a lot more than a paycheck. And I mean this, I give my word. He would say, a job's about a lot more than a paycheck, Joey. It's about your dignity. It's about pride. It's about being able to look your kid in the eye and say, honey, it's going to be okay. Think about it. I mean, literal sense, think about that. It's about your dignity, how you're treated, and being able to make a living you can tell your kids it's going to be okay. The second big part of Bidenomics is empowering American workers. When I took office, unemployment was over 6%. With the American Rescue Plan, we provided relief and support directly to working class families. Our economy came roaring back. Unemployment dipped below 4% by the end of my first year in office. Now it's been below 4% for the longest stretch in 50 years of American history. And I must admit I concentrated on it, but we've seen with the help of Jesse Jackson's legacy and a lot of other people here, we've seen record low unemployment for African Americans. Record low unemployment for African Americans and Hispanic workers with disabilities. The lowest unemployment rate in 70 years for American women, and you make up half the economy and probably 2/3 of the brain. No, really, think about it. To pause for a second, when I was trying to name me a time when you thought any Democrat would get the endorsement within a week. Every single environmental group out there, the AFL-CIO, the women's groups. I mean, here's the deal. When I sat with the AFL-CIO, when I sat with the IBW, starting when I ran last time, I said, here's the deal, though. I'm going to be the most pro-American, most pro-union president in history, but you've got to employ more women, you've got to attract more African Americans, and you've got to attract more minorities. They have. They're going around. It's beginning to change. In every industry. Anyway, I go to these sites where they're trained. And by the way, the other thing I've told labor guys, you got to brag a little bit more about what you do. You realize to get a license to be an electrician in this town or any other, you got to essentially go to 4 years of college. You have to go through an apprenticeship that takes you 4 years to 5, depending, or you can't get a job. You get paid a little bit, but you can't get your license to be an electrician, a labor electrician, until that happens. Look, pay for low-wage workers has grown at the fastest pace in over 2 decades. Full employment means workers, especially low-wage workers, having more bargaining power to demand good pay, to secure good jobs. And this is a thing that isn't consistent with whether people think that we're moving in the right direction. Job satisfaction, based on every poll, is at a 36-year high. More people are satisfied with their jobs than any time in 36 years. And the shame of working-age Americans in the workforce, the share of them, is the highest it's been in 20 years. Remember what they were saying? Biden policy isn't working. He's just paying people not to work. People on the sidelines. Well, guess what? Every single day in 4 years before I took office, you may remember, I took a lot of criticism in my presidency. Republicans charged me we were encouraging people to stay home, not work. Well, they were wrong. The evidence is clear. Americans are back to work who've been on the sidelines, and they want to come back. And we're going to continue this progress and make sure every American has the training and education to participate in this new economy. We've increased Pell Grants, made landmark investments in historic black universities. We've invested more in registered apprenticeships and center career technology education programs than any previous administration in American history. Because of this new economy, we don't need everyone to have a four-year degree. It's great if you can get one. We're trying to make it easier for you to get one. But you don't need it to get a good-paying job anymore. Think of this. How many of you remember going back to high school and they had shop class? And they had classes where people could learn if they were interested in working with their hands. They don't have them very much anymore, anywhere around the country. Well, my wife teaches at a community college, full-time still. She has an expression. She said, any country that outcompetes us, out-educates us, will outcompete us. We're not going to let that happen. That's why we're investing significantly in education. I'm determined to keep fighting for universal pre-K and free community college. We're also fighting to make child care more affordable, because we know one benefit is that it opens up significant opportunities for parents to be able to go back and join the workforce. We're also making it easier to empower workers by making it easier to join a union. As I said, I promised to be the most pro-union president in history, and I tell business leaders all the time, our union workers are the best in the world. It takes 4 to 5 years in that apprenticeship. It's like going to college. They'll do the right job on time. Long-term cost for business is less. You know, addressing the 40-year decline in unionization by supporting project labor agreements, collective bargaining, prevailing wage laws. That's the reason today America's support unions is higher than it's been in 60 years. 60 years. And by the way, I met with the Business Roundtable and others. They said, why am I so pro-union? I said, because it helps you. It really does. Think about it. The total cost of a major project goes down when you have the best workers in the world doing it. Not a joke. It's true. It lasts longer. You don't have to worry about whether that socket's going to work. Look, young people are organizing new companies and industries. You know, I've indicated to labor leaders they must expand their ranks. As I said, more women, more minorities. That's what they got to do. Third part of Biden economics is promoting competition.
No, not a lot of calls coming back in.
On a level playing field. They have to work harder to attract
calls that were there are still there.
Recruit and retrain workers.
Not a lot of calls selling off, like 43.75.
Well.
Higher those still low.
Trickle-down economic theory. 3/4 of U.S.
volume right now is just low.
I mean, excuse me.
There's some futures price action here, but
I'm thinking I didn't go to Mass.
That doesn't look very bullish.
They were moving to diminish competition. Well, that may have been made things easier for big corporations. But for everybody else, it made it harder, more expensive. It got harder for small businesses to compete. It stifled integration. It reduced wages for workers. And it made our supply chains more vulnerable. So, folks, that's been the Republican plan so far. Good for big business, bad for everybody else. It's not even that good for big business anymore. When I came to office with a very different plan, a limited concentration of power at the expense of consumers. The cops are back on the beat enforcing antitrust laws. My administration is working to crack down on what we used to call non-compete agreements. We still call them that. These prevent 30 million Americans from security guards to retail workers, from walking across the street to the same kind of business and getting a higher pay, getting $5 more a week or $10 more a week. Non-compete agreements? It's one thing to have non-compete agreements when you're dealing with trade secrets. It's another thing when you're doing the same thing of flipping a hamburger and you're going to get 5 cents more by walking across the street to a different place. We promoted, we're supporting small businesses. You know, Vice President Harris has prioritized providing support and capital for small business owners, including for rural minorities
$5 to $10 a week.
Entrepreneurs.
You could buy one half of
brand
that
new
burger you
programs
just
already
flipped.
helping deliver billions of dollars in growth capital to small businesses in every state. We've seen a record 10.5 million applications, 10.5 million applications for folks looking to start a small business just in the last 2 years, 10.5.
Student loans, I think, represent
Every one of those
$18.5
applications is an
billion
application
a
home.
month detracted from current consumer spending.
Competition also means lowering costs for consumers.
That's a
Bringing down
rough
inflation
estimate.
remains one of my
Obviously,
top
it
priorities.
varies
Today,
based on the
inflation is less than
risk-free rate.
half of what it was a year ago. And that inflation caused by Russia and by the war in Ukraine and by what was going on. But we knew we had to do more. There's more than one way to bring down costs. Another expression my dad used to use, for real. He'd say, Joey, he said, at the end of the month, the question is, after you pay all your bills, do you have just a little left for breathing room? Just a little less for breathing room. All your bills paid. Do you have anything left? Well, inflation eats into that, obviously. But guess what? Bringing down the cost of medication goes a long way to giving you a little more. That's why through the Inflation Reduction Act, we finally gave Medicare the power to negotiate lower prescription drug prices like the VA does now. We've been trying to get this done, Dick and I, for decades in the Senate. This time we finally beat Big Pharma for the first time. You know,
Ooh, my lily puts.
same drug made by the same American company, sold in Chicago, is more expensive than that same drug sold in Toronto, Great Britain, France, Germany, any city you can name, for real. Now seniors on Medicare are paying as much as who were paying $400 a month for insulin last year are now paying $35 a month. Because guess what? You know how much it costs to make that insulin? 10, T-E-N dollars. Package it, maybe 12 total. And the guy who invented the insulin didn't even ask for a patent because he wanted everybody to have access to it. We're just finishing the first round of negotiating drug prices. And we'll say to taxpayers this year, $160 billion. That's like a tax cut. Lowers the cost of prescription drugs and it lowers the federal deficit as well. We're expanding health care coverage for more Americans, building on Barack's Affordable Care Act. You know why we're doing that? I'm proud to strengthen that act, saving average families $800 a year on their health care premiums. We're also fighting to end junk fees. Most people don't think of it that way. Well, here's what a junk fee is. They can add up to hundreds of dollars a month for a family. Like that extra fee when you say, I want my child to sit next to me when I take him to see Grandpapa on the West Coast. It's not listed now. They're listing it now. Hotel resort fees. You don't realize, you're not told they're going to be, you know that ad in television? Mine is $200, his is $180. Well, guess what? Or the one that bothers me the most is overdraft fees for banks. The banks made $7.7 billion a year on overdraft fees. You overdraft a check, you get a penalty. It's one of the leading bank presidents, God love him, he's passed away, but he had a yacht. The name of the yacht was Overdraft. Swear to God. Well, guess what? There are going to be no more overdraft fees. Folks,
Jesus Christ.
we're doing this, doing all this, reducing the deficit at the same time. Just in my first 2 years in office, my team and I have reduced the deficit by $1.7 trillion, more than any president had. just in 2 years. And the budget agreement I negotiated without having to give away anything of consequence reduced the deficit by another $1 trillion. You know, reversing 40 years of Republican trickle-down economics that helped few but hurt the middle class, it's going to take some time. But we're in a place where some big pieces, and we're moving in a direction where we can get some more done and people will see it. What I'm doing, and I knew I'd have to do this, all those major legislations we pass, people go, that's great, but it takes time to get it out in the field. It takes time for them to see it. And I'm not here to declare victory on the economy. I'm here to say we have a plan that's turning things around incredibly quickly. But we have more work to do. For example, does anyone here think the federal tax system is fair? Raise your hand. No matter how much money you make.
This is cringy.
We're going to make it fair by eliminating loopholes for traders, hedge fund managers.
Oh, I'll
Big
get
Oil
into it
made
afterwards.
$200 billion last year and got a $30,000 tax break, $30 billion tax break. We're going to get billionaires to pay up a little bit, at least the minimum tax. You know, when we began, there were 750 before the pandemic, 750 billionaires in America. Now there are 1,000. You know how much their average tax is? They pay federal tax? 8% taxes. No billionaire should pay a lower tax rate than a school teacher, a firefighter, a cop. I mean, this is... I'm not talking about the old days of 70% tax. I'm talking about a fair shot. If they just paid the top tax rate that exists now, which is 130%, we'd raise billions and billions of dollars, lowering the deficit, allowing us to pay for so much more we have to do. That's the next phase of this fight, making the tax code fair for everyone, making the wealthy, the super wealthy, and big corporations begin to pay their fair share without raising taxes at all on the middle class. I made a commitment when I got elected. No one in America making under $400,000 ever have to pay a single penny more in federal taxes as long as I'm president. And I've kept that promise. And $400,000 is a lot of money where I come from. Let me close with this. When I came to office, I had a fundamental decision to make. We're going to continue trickle-down economics as a policy that's failed time and again, that grew inequality, that saw jobs go overseas, that saw, and you've seen it out here, towns hollowed out. I ran on the promise I was going to end this, and that I began to build an economy from the middle out and the bottom up. We're not going to continue down the trickle-down path as long as I'm president. This is the moment we're finally going to make a break and move away from an economy that has existed in a fundamentally different direction. Here's the simple truth about trickle-down economics. It didn't represent the best of American capitalism, let alone America. It represented a moment where we walked away, and how many in this country, from how this country was built, how this city was built. Bidenomics is about the future. Bidenomics is just another way of saying, restore the American dream, because it worked before. It's rooted in what we've always worked best at in this country, investing in America, investing in Americans. Because when we invest in our people, we strengthen the middle class, we see the economy grow, that benefits all Americans. That's the American dream. 40 years of trickle-down limited that dream, except for those at the top. Too many, for too long, have seemingly suggested that it's only available if you have a 4-year college degree. You can work at a teaching or work at a tech center. These new factories that are opening, these fabs that are opening for semiconductors, without a college degree, you're going to make $100,000 to $130,000 a year working in those fabs. $100,000 to $130,000 a year. But I believe that every American willing to work hard should be able to get a job no matter where they are. In the heartland, in small towns, in every part of this country, to raise their kids on a good paycheck and keep their roots where they grew up. That's Bidenomics. I think the economic philosophy is not going to restore the American dream that we have now, that philosophy, but this new one will. It's going to help, and I think it's going to help lessen the division in this country. by bringing us back together. It makes it awful hard to demagogue something when it's working, although they do it all the time. I've long said, and I mean this, I was on the Tibetan Plateau with Xi Jinping. I traveled 17,000 miles with him. I've spoken with him more than any other head of state because it started when I was vice president, and President Hu was the president, and he was the vice president. We knew he was going to be successful. It was inappropriate for Barack to spend that time with him, but I spent a lot of time with him. I met alone with him, just he and I, and a simultaneous interpreter 68 times, 68 hours. 68 times, more than 68 hours. By the way, I turned in all my notes. But, this is God's truth. He asked me, we're in the Tibetan Plateau, and he asked me, he said, can you define America for me? And I said, yes, in one word, and I meant it. Possibilities. Possibilities. We're a land of possibilities. And I told him it's never been a good bet to bet against America. Never. And I can honestly say I've never been more optimistic about America's future. I swear to God. I've never been more optimistic. We just have to remember who we are. We're the United States of America. There is nothing beyond our capacity if we work together. So God bless you all, and may God protect our troops. Thank you, thank you, thank you.
Wow. That's a lot of fluff. It'd be really cool if it was real. Any subtext? I mean, listen, I really don't like either of our parties very much. I think they're both fucking garbage. And more so the politicians. So I kind of... Yeah. I don't think Biden has a lot to lose. Yeah, I don't like libertarians either. They're just fucking like the incels of the political world. It's tricky. Like the odds of Biden dying in office are pretty high, right? Let's do like a lot more logical analysis. So he's only doing it for what? Legacy? Like towing the party line doesn't really matter to him. He's not done that a bunch, right? And that to me is interesting, right? Because if he's gonna die anyway, he doesn't really have to kowtow, right? He's probably not gonna make it through a second term, even if he did get reelected. And the things he's done so far, like, and they really haven't been in the media a lot, but like the economic sanctions that he's put on China, and believe it or not, the decisions of the Fed have pulled the U.S. economy out of what was essentially a tailspin going into the pandemic already, right? We were losing ground to China rapidly. Now our economy is projected to advance over theirs over the next 10 years. I mean, this kind of goes into like the breakdown of Dalio's whole theory that, you know, China was going to usurp America, and had the path at the time continued, that would have been true, right? I mean, I don't think he's going to get any serious tax legislation passed which is unfortunate. I don't care if you're Republican or a Democrat. The fact that corporations that make, you know, $200 billion a year in profit are paying, you know, a quarter of their tax obligation every year is fucking ridiculous, right? And that billionaires pay, you know, 8% on their marginal income compared to, you know, single individuals paying 24 to 30%, right? It's, I mean, it doesn't matter what side of the aisle you're on, there's a discrepancy there, right? That has to be resolved for there to continue to be a lower or middle class. And I mean, it's like the things he's saying are nice, right, for everyone, but the reality is we'll probably never see any of it come to fruition because trickle down economics has gone on for so long now that it's entrenched, right? I'm not running for fucking president. Fuck that shit. I will say that it was arguably one of the worst economic decisions the US has ever made. Maybe only rivaled by Glass-Steagall being repealed. Or NAFTA. But reshoring America's economy is very bearish in the short term. Long term, it's good for us. It should have been done 15 years ago when offshoring our economy became so popular. But, you know, it's hard to pull that off when shareholders are beneficiaries of that, right? Pickled down economics. How about with the market crash if Biden suddenly passed away on any given day? I mean, I'm sure there'd be like a correction if it occurred because it would create volatility, but what do you see for SPX for the remainder of the day? Well, we regained 43.75 for a second there and then lost it. We're still stabilized at 43.70. 43.70 is the key resistance for more downside. There's very little support to the downside here. So, we'll see what happens. I don't see a lot of call interest coming back in. This is now the 7th day of arguably failed pumps in a row. And if there's no buyers, then the price needs to correct to a level where they find some. What kicked off that drop? Call selling on 0 DTs. 43.95, 43.90, 43.85, and 43.80 dumped a shitload of OI on the 0 DTs. $43.75 still there, but it's decaying, and it's now out of the money. They've bought in and pumped every single day through the drop. Like, I mean, not as significant numbers of 0 DTs as they did before, but every single day, right? And that's kept VIX suppressed, even though, you know, the market's down week over week, right? But because VIX is so low, they're not getting the leverage they were getting. And so the pumps keep failing. No one's coming in to support the price level. I mean, the 43.75s they've barely closed. I'm not even sure if they can. I think if they close them now, they just put their short puts in the money, right? And then they're really fucked. Underwater bulls are in a tricky situation. I mean, levying personal attacks against him doesn't really seem like a grounds for any coming to any kind of logical conclusions, right? Who gives a shit what his son does or how corrupt you think he is, right? It doesn't matter. He still leads U.S. policy, right? Whether you like him or not, he's the president. Yo, dog, we heard you liked Risk, so we risked our risk with Risk, so we could risk the risk so that even risk. Oh, Joby. Yeah, so options chain looks really heavily sold at 10. Maybe volatility shorting given the amount of OI on basically a no name stock, right? If it breaks 10, it could squeeze out that position. But the chain is mostly dead up to 10, right? So it looks like you know the price action that drove it up was largely just buying. There's not a lot of like long call interest on the chain anywhere. So I mean that might change over the next few days. But I think whatever happened today was a surprise. Now, if there's shorts, like there's a few short calls below 10. Those might get squeezed out on the pump, but probably not. So you'd have to wait and see if there's more positioning comes in on the news. It's I mean it's not like a big name stock, right? So everyone's not just flooding into it when they have some positive news. What do you want to ask about Netflix? I'm torn on selling for big profit or holding out a few more days, like you just said. You could do both. Like, can't you capture some profit and then see what happens with the rest? Picture mentioned discussing potential plays later in the week. I'm just curious how you played it. I'll discuss that in Pickles Picks at the end of this week. After some thinking, students should be taking out multiple credit cards, pay for tuition, living with a growing snowball of debt, then declare bankruptcy, then no more student loans. You could do that. The only reason he's running again is what? I mean, he's the incumbent. Of course he's running again. Yeah, I know student loans aren't subject to bankruptcy protection. He's talking about using like credit cards and personal loans to pay for student debt. Why are your presidents so old, Gork? I don't know. What country do you live in where they're not? Probably Canada. I've seen their fucking parliament. There's not a lot of young guns in there. All right, so if we close around here, the likelihood of 4,400 is way less doable because economic data the rest of the week is expected to be undesirable and charm. If we close around here, the long call positions at 43.75 are fucked or need to roll. The sad reality is there's minimal ROI on a college degree unless you study something that pays well, like engineering, comp sci, business. Here's the deal. A college degree is only as valuable as what you do with it, right? This is the I think this is the fundamental problem with college in the US anyway. Is people think they can just get a degree and then they're worth more money. But that's just not the case. It's never really been the case. You could get a degree in fucking liberal arts and become a billionaire, right? The degree doesn't matter. It's a litmus test for businesses to determine if you can complete coursework in a timely fashion, right? Like that's all it tells you. For 4 years I did this thing in a structured manner. A professional degree says I understand the minimum basic criteria for this profession, right? Whether that be business or law. I mean, nobody's taking a lawyer fresh out of school and putting them on, like important cases, right? And you're not guaranteed like partnership at a firm. You can go to medical school and become a podiatrist. Why podiatry? The foot stuff in the Discord is now full circle. But the idea that it provides some value behind education is ridiculous. It doesn't guarantee you anything. Half the baristas at the Starbucks down the block from me are fucking college graduates. Probably all of them. The sad looking ones are college grads. They all look sad. It's a Starbucks. I drive a short bus. I have come full circle. Streaming JPOW tonight at 2:30 in the fucking morning? I'm probably not even gonna watch it. I met so many people fresh from university without any live and job experience and dumb, like a square foot of gravel road. The smartest person I've met did just have middle school. I heard all the time growing up you just need a degree, doesn't matter in what. I mean, that's kind of true as a barrier to entry, but if you're motivated enough, that can be crossed. I knew a dude who was a fucking pizza delivery driver in like the late 80s, and now I mean he still runs a desk at a major investment bank. He just really liked the idea of trading options and fucking came in every day and nagged guys until they gave him something to do. I do realize the world's not like that anymore, but you can still facilitate it. Just be charming and work in finance. Problem solved. There's only so many jobs in finance, poopy pants. Print out your resume on paper, insist on meeting the CEO, and give them a firm handshake. Become a programmer and then outsource your job to people in India. You win, they win. You might as well, I mean, you could just outsource like 50 jobs, right? As long as you work from home. Probably a lot of management, but what if your handshake isn't as stiff as the paper that you printed your resume on? I've decided that calendar spreads are the bestest. That is all. They're pretty cool. And you better be cute. Hey, Trina. Is this where the zero DTE call pump begins? It's a good time for it. Although I would say volume's not moving around very much right now. Shopping in this range is pretty bad for sold puts, right? Falling below this range is pretty bad for sold puts. I think the pumpers watch the stream. My evidence, they've gotten their calls in the money 3 times and still haven't sold. Sounds like the pickle jar. Are they pumping to get liquidity or to move up more? I mean, you'd think they'd want their fucking billions of dollars worth of calls in the money. What's your favorite type of pasta? I don't know if I have a favorite type of pasta. Certain pastas complement certain sauces better than others. Semolina. How about for bolognese? Hmm. Uh, like rigatoni or fusilli? I can tell you I don't like spaghetti. It's almost always the worst choice. I was thinking about becoming an FA, but I loathe the idea of a ton more schooling. Do you have any tips or motivational words of pickle wisdom? You don't need any more schooling. Financial advisors are arguably the, the lowest rung of the finance ladder. Like unless you have some severe like brain damage or something, I don't think anything could disqualify you from getting that job. Even then, you still got a good shot. No, their assistants are. It's how I met my wife. Pappardelle? Yeah, it's okay. It's it's not my favorite. I think it's way too popular. Who has the best meatball sub? Me. The one if if I make them. The problem with angel hair is it doesn't stand up well to heavy sauces. Felons might have a hard time. Yeah. Yeah. But that's just kind of true across the board. Question about the book? What book? You retracted the fucking message. What's your favorite drink? Like booze? Boozy drinks? Slow gin fizz on a hot summer day. No, I'm just kidding. Where am I? Probably margaritas. They're just so easy to drink. Is there an Italian pasta dish that is served cold? I worked for an Italian dude who gave me some a long time ago, and it was amazing, but I have no idea what it was. I think there's a few. Was it vinegary? I can't remember the name of it. It's pasta salad. Gross. Real margaritas or frozen? Real margaritas. Cadillac. I don't like Moscow mules or the fucking stupid pretentious mugs. Talking about stocks, do you eat or throw away the crumb of a baguette? I never throw away any part of a baguette. I prefer Grand Marnier to Cointreau. Yeah, Don Julio's good. They're copper mugs. Here's the trick with a margarita. They can't use pre-mixed sweet and sour. If they use pre-mixed sweet and sour, it's ruined. They have to make it fresh. Were margaritas involved in your TGIF incident? No. Strawberry daiquiris with red rum shots in test tubes popped into the top, served in what was probably like a fish bowl. I had like 9 of those. What happened at TGIF? I received a permanent banishment from their establishment. Hasn't everyone? I don't know, maybe. Have you tried going back to a TGIF since to test the process? So yeah, if I don't order a drink, then I can go to a TGIF's. But if I do and they scan my ID, it tells them I'm banned. And since there's never a reason to set foot in a TGIFs unless you're drinking, I'm effectively banned. Ow. What did I miss? Bulls did pumpies and then they failed and then they're trying to do them again. Thank you. No, I got thrown out of a Whole Foods. I'm not banned from Whole Foods. No. That was something else. That was when I got catfished on Tinder. JB. 4,400 possible for tomorrow. Sure. Probably be a lot easier if they closed today above 43.75 though. Which they may not do. How does one get thrown out of a Whole Foods? A poor choice in sweatpants. It's like Tinder for twins, Tim Timmery. Were you filming an expose on their malicious selling of half foods, such as half a melon or halved pears? No, but that's a great idea for a documentary. Blank swan event likely by end of week. What's a blank swan? They weren't see-through. Well, maybe they were. Well, like a little bit, but not really see-through. They were just the exact color of my skin. No, they didn't say juicy on them. Wish they did. I would have kept those pants. Salmon strikes again. And skin-like material. No, they were like a thin sweatpant with a 3D image of hog. I probably should have looked at a mirror before I left my house. How tight were they? They're like joggers. How do people wear light-colored pants and not spill stuff on them? Just don't eat around them. What compelled you to buy skin tone joggers to begin with? There was a reason for it. Oh. I thought they would look good with a green shirt that I had. They didn't. It was the pandemic. All right, like I was buying a lot of things for no reason. I bought them online. I think they were from like Nordstrom's. Did it effectively hide your thunder? No. How did you get into that, if you don't mind the question? So my best friend in college, his dad. Well, I don't want to say best friend. Guy I took care of while he was really pissed drunk, and his family liked me better than him. And then his dad ran a family office and got me a couple internships, and then I got a position. So, Nepo. Nepo adjacent. That's basically how you get any job in finance. Find someone with a coke problem, befriend them, go to family functions with them till you get a job. They'll be like, where do you work? And you're like, nowhere right now. I've been managing my own portfolio, which at the time didn't exist, but I said that anyway. And they were like, well, how's your performance been? And I was like, fantastic. And they were like, well, do you ever want to, work for someone else or manage outside capital? And I was like, sure. I'd love to do that. Turns out I don't like doing that so much, but you know what? Believe it or not, taking off Friday, there's literally no vesting, like, or verification process at all. Zero diligence is done. That's why I said everyone here can be an FA for Fidelity. They don't care. Either you make them money or you don't. I graduated high school with an Indian guy named Nepo adjacent. Cool dude. Managing my own portfolio is just something out of work finance people say. It means unemployed, but it sounds nicer. It's like being from the South. Like, God bless her, that kind of thing. I think I swallowed too much water. Now I'm burpy. My mom is a financial advisor for whatever is left of my dad's pension. She's in a retirement home with the FA's old high school math teacher who wasn't impressed. Yep. It's like saying I sell a little bit of oil on the side. Yes, like the South, my portfolio also underwent a failed reconstruction. I really want this to drop again. Because I don't want to buy calls. Maybe it will. Have you watched The Bear? Pretty good. Michelin chef saves a family restaurant. No. Back in DC from New York. Went to Scars while I was there. Certainly grade A. By the way, I may or may not have to return to New York City in 9 months. Okay, noted. I quit buying calls. It felt gross. I just buy puts on VIX now. Oh, okay. Doesn't that kind of feel gross too? Because they have no delta? What's an important piece of data this week for the bear thesis? Like overarching, GDP tomorrow and PCE will be very important. Actually, jobless too. Continuing rise in jobless claims, both new and both new jobless and continuing jobless claims. So we want to see continuing at least stay flat or slightly increase, and new claims we want to see flat or up. Both are acceptable. If I come back in 9 months, are you available for Godfather duties? What? What is that? I don't even know what those entail. You trying to get me to whack someone? Or take you to like your baptism? Hasn't all bearish data simply been ignored since March? Yeah. I'm okay with that. They can keep ignoring it if they want to. But it doesn't make the data any less bearish. I will likely need to go to New York City in the fall. What has changed there in the last 5 years? A bunch of smaller businesses went under. Can I still get the clap from sitting on the subway? Only if you're going to pull out your penis and rub it around on the seat. You could just buy one of those tiny travel-sized bottles of Lysol, though, and do whatever you want. I thought that was mandatory subway behavior. Yeah. I mean, if you think you're gonna get mugged, it's probably a good way to prevent it. How'd you know exactly what I was planning? If they can get the 43.75s in the money, chances they take profit and let it dump. Well, they've gotten it in the money like fucking 7 times and they haven't sold them. People can't mug me. The market maker already has. You throwing your money in their face like a stripper is not a mugging. That's like coming home and your girlfriend's like, "Why are you broke?" And you're like, "I got mugged by a stripper." No. In my application to Fidelity to be a financial advisor, it asks what I would need from them. So is Pontiff considered a business expense, or is that an out-of-pocket expense? Thanks in advance. You wouldn't call it pontiff. You'd call it private, one-day private consulting session. Portfolio, yeah, one-day private portfolio consultation. See if HR charges you back for it, I guess. Eastern Europe is wild sometimes. You sound just like my girlfriend when I told her that a stripper robbed me. You got to make it more believable and sound like you were outnumbered. It was like a gang of strippers that robbed me. If you can afford Pontiff, you can afford a CPA. Yeah. What's up, Dancy? What do you think of SPX the rest of the week on this bullish news? I have some 373C hedges that were worthless and now have some value, but if we keep pumping, I'll wait. Which bullish news? I don't think any of the news. We had some okay data yesterday. It wasn't bullish. It was just not super negative, but still negative. Oh. That will not work. You're making it worse. Yeah, but I want to... It's funny. I got taken into the champagne room forcibly. There were 3 of them. What did you want me to do? I had a friend who tried to argue this with his fiance after he had a bachelor's party at a strip club when he wasn't supposed to have a bachelor's party at a strip club. And he was drunk at the time and went into a tirade about supporting women and sex work. And how, because he made more money as a man, he was obligated to give that money to the strippers. In order to balance out the wage disparity. As drunk as he was, it was well crafted. It was well crafted. That literally just happened to me a couple weeks ago. How many kids do they have now? I don't think they have any kids. They did get married, although that was tumultuous. I think I'm being stalked. I took my son's car to work this morning, and a guy who does not work here just texted me asking if I bought a new car. That's fucking creepy, Jen. My initial reaction to that text would be, what the fuck? How do you know I have a new car? You fucking weirdo. Dude, I owned Rite Aid shares for like a week. I don't still own that garbage. If we're still in a net positive gamma environment, why are downs so violent compared to ups? Because the downs were propagated by long call selling. Okay, rad majority holder. It's my homicide investigator police officer boyfriend's car. What if that's their kink? Where's the post 2 p.m. cheap 0 DTE call pump? I think they tried to do that earlier today on more expensive calls. Now they have no money. You can always go back to the strippers, Magnanimous. I got robbed by my first window girl in Amsterdam. And by robbed, I mean hustled. But to be fair, my wife was there and amused it should cost that much. Right, so your wife accompanied you to hire a lady of the night in the red light district of Amsterdam? That's very progressive. Checked my inbox. No termination letter. Winning in life. Did they fire that other guy yet? You can't stop till he's fired, Rims and Tims. It's like Highlander. It was a lady of the morning. Discord audio? What's wrong with it? Did it crash? There. Thanks for letting me know. I'm just leaving the message unread for now. I've got to think it through. I'll tell you the first thing you need to think through, Jen, is turning off the read notifications on your messages. You don't need to tell people when you're reading their messages. I have no idea, Dwayne. Yeah, unbridled joy, Edwin. I guess they never found the flour and sugar mix I sprinkled all over his desk alongside the rolled up dollar bills. What's the next step there? You know, you have this entire community at your disposal to come up with ideas. They probably thought your coworker was making sugar cookies for the office. Is he into baking? Also, make sure you don't have random people on your Find My app for Apple, as you could be getting tracked. Oh. Yeah, you want to turn off like the air thing too, right? He used to be on the board of trustees. He's not anymore. Was he there today when you arrived in a different vehicle? But we have GDP. We have GDP tomorrow. JPow's speaking in the middle of the night. I hope he uses that opportunity to say all the bearish things he can't say during the day. No, he moved to the next town over. Has he been a creep in the past? Did JPow repeat his exact speech? No. He said some like more hawkish things actually. He said things like, we don't project cutting rates in 2023 or 2024. Is the 4400 dream dead? I mean, I think it might be for today at least. They're kind of in a tricky situation now because we're under 4375 where all their fucking calls are, and they were selling 4360s. The only things that JPOW has said over the last month that were clear and without reservation was that the job was not done and that market part shouldn't expect cuts. What? What's that? As someone in charge of bond market pricing, that sounded like you said cuts in Q4 of 2023, right? Okay, so cuts in Q4. Yeah, I heard cuts. Sounds like cuts. I'm not going to price in your lies. You can just keep lying to me, but I'm not going to price them in. La la la, can't hear you. I mean, that's kind of what it's like at this point, right? It's so fucking ridiculous. It's like a little kid covering their ears, or like, have you ever seen little kids like cover their eyes because they think like the thing they don't like will go away? Like if they cover their eyes, somehow they've disappeared from the situation. That's what the bond market's done with rate hikes the entirety of this year. They actually did start pricing in a little bit, like the week before last. But he also said if there's clear data that shows inflation consistently recovering, they would reevaluate. Yeah, he did say that, except the data doesn't show that, right? The data shows that an increase of 0.1 in core CPI at any point is going to create an uptrend in the seasonally adjusted or non-seasonally adjusted year-over-year CPI, right? Which means core up. Also, headline, same deal. For headline to hit the current Fed target, its month-over-month increase has to stay above 0.2. Below 0.3. It has to stay below 0.3. So a 0.4 print on CPIs month over month, or a 0.5 print on PCE are both going to raise the year over year trend, right? From deflationary to inflationary. In law speak, that means there may be a chance. But then he also said not this year, right? He's repeatedly said not this year. They're not reevaluating this year at all. Meanwhile, the bond market's still pricing rate cuts in like December. They've moved them from October to December, but they're still pricing them. Like the bond market's considering the inflation to be at like 2% by next spring. Meanwhile, JPOW's not convinced they're going to get hit 2% until 2025. Right? So they're just on very different pages. I think this breaks down into close. Do we have enough time? Yeah, we might. He just texted he was driving past the library and didn't see my truck. Is your truck like really noticeable? Are there a lot of cars at the library? Why is Jimmy outperforming everything today? I don't know. What's today? The 28th? What are FTDs today? Wasn't there like one like higher FTD day this week? Hold on. Today's nope. ETF FTDs 28th. Tomorrow's are 400,000. Maybe they're clearing them today. Or they're a day off. There is one day. It says 29th, but maybe it's off because of the holiday. But there's like 420,000 ETF FTDs. It was supposed to be 128,000 yeah, 182,000 today. So maybe that. The options market on it doesn't look particularly interesting. $44.40 on ES into close. Bounce to $44.40. Jimmy seems to be tracking IWM pretty closely today. Are we sure it isn't in the Russell 2K? I don't think so. Finbox says it is. But I don't see... Like, IWM didn't buy GME back up. Well, I guess they haven't reported yet. Why does Finbox say it's back in there? That's fucking odd. Hold on, I'll check FTSE's website. Hmm. Nothing in there. Final index editions. GME's not, so it's not in the microcap index. Why don't they have the final editions for the R2K listed? Yeah, for some reason they don't have the final edition. They still don't have the final index editions and deletions listed for R2K or R1K. The zero DTs get really cheap and to close, right? SPX pump possibilities. I mean, it's advantageous for them to get the price above 43.75. I mean, I'm not gonna fucking try to play this. I think it'll sell off, right? Because you have charm decaying at the 43.75 strike, and you have puts accumulating at like 43.60. In addition, that the 43.70 and 43.80 and 85 calls, all of which are more numerous, are gonna fall off as well. You said the main positions they have open. Well, they have a lot of positions open. But yeah, the two big call positions are 630, 43.75, and 4400 calls for 721. Not 720. That's on Amazon 127p expiring Friday. 128's probably better. 127.25s were resistance, and if you're getting two DTEs, you needed to go in the money. And risky. Amazon, like I've said before, Amazon is probably more defensive than a lot of the other tech stocks. They seem to be buying so many 4380s, and yet the price is dropping. Is that charm? Um, it's gamma too, right? They're not, by buying 4380s, they're not really creating a lot of meaningful push up. More importantly, I guess, at what VIX level were those opened? Oh, like the calls or the short puts? The short puts were opened in this range very heavily with like VIX under 13. Um, the calls, I know the 4375 calls were opened with VIX at like it was like just above 13, I believe. They were opened like the Tuesday. It was the Tuesday. Fuck day was that? Maybe they were open Monday. This might have been open Monday the 12th. So VIX would have been at like somewhere about between like 1450 1477 on the calls. So yeah, the calls aren't actually like the 4375 calls. Well, the ones that were open back then, which is a big chunk of them. Those aren't doing so well on Vol. Vol's about $1 down from where those, or VIX is about $1 down from where those were opened. The short puts were largely opened like on the 8th, 6th, 7th, 8th. The ones at this level were. The July 21 puts. Yeah, so the puts at there's both puts and calls at 4400. The puts were opened at 4400. Those puts were opened like 4400 and 4410. Those were opened on the Friday before last. The calls at that level were opened, I believe, before we tested that level. The 721 calls were opened when we broke up above the collar. Discord? Did it crash again? What the fuck is going on with this? I don't know why the Discord keeps crashing. Sorry, guys. BlackRock taking it down for MOASS? Maybe, but you think they would have told me first. High price target for GME. I don't have one. I don't care what GME does. As long as it doesn't go over like 2750, I really don't give a shit. Why don't you have 128 gigs of RAM? I don't know. I didn't need it. Seemed like, I mean, when the fuck do you ever need 128 gigs of RAM? What are you trying to run two EA games at the same time or something? When you leave your computer open streaming stocks for multiple days at a time. There's like no delay on my mic. When 127 doesn't cut it. There's about a 10-second gap between Discord audio and the YouTube stream. The YouTube, I mean, YouTube, like, RPMT, whatever, up, like, the stream upload has a delay on it. There's a clock there in the corner, though. I don't think the delay should be that significant. It shouldn't be 10 seconds. I manage a database that's got 2 terabytes of RAM. There are use cases for more. Yeah, but not in, like, home computing. I mean, right now I'm only using, like... What the fuck? Like 46% of my memory? That's kind of high. YouTube stream is so delayed. I'm still watching March. Dude, get calls. When do we short Tesla? It's kind of right back where I want to short it. I don't know. Maybe I'll pick up some more 250s again here. July? Yeah, I'll probably pick up some more July 250s. I might wait till end of day, but if it closes below 256.61, then I'll, or well, if it's moving to close below that, I might pick up some 250s again. Those were really good last time. Is Jimmy gonna dip into the $20 range? How long do you have? Last time he upgraded something, he fried a hard drive. Yeah, I did. That was fun. But I got a backup drive since then, so I can. I'm back it up pretty regularly now. Tesla reports China's sales numbers on Friday. Ooh. So the question is Tesla responsible for the 20% of cars still being sold in China after the 80% drop? How about an idea or some 0 DTE 4380s? You could try it. I don't think it's gonna work. Ugh. Like, I still think this is gonna sell off. I should buy some 40. I'm gonna buy some 43.65 puts. They're cheap. Beta's a measurement made over a long period of time, not one day. GME's beta's about 0.3 right now on the daily. I don't know how long the rolling average is on that though. I think it's 3 months. I live day to day, baby. I think this sells off well enough to bet $25 on it. I mean, I just bet more than that. I think an ES sub 4,400. I fucking hope so. It'll probably find support again. Will a stress test affect SPX? I mean, the results of it might. Nice call on the 43.65. Thanks, man. They're doing okay so far. I need to move the stop up. I just put a trailing on it. Fuck this. No. If you had to choose one to purchase and you can't say neither, Range Rover Sport SVR or BMW X5M, the Beamer, although the V8 engine, if it's the V6, or well, not, I guess not V6, inline six, I don't know which engine the new X5 has. If it's the inline six turbo, that's probably the V8 engines that BMW makes are bags of shit. And Range Rovers are actual fucking garbage. It's not blasphemy. They're terrible. All British cars are awful. That was a nice, quick profit. Gave up so soon. FYI, you have to buy 5+ contracts, and when you buy them, they show up in your portfolio. What are you talking about? Oh, for CME contracts. Are you trading futures right now? I made so much money today. I'm gonna celebrate and buy myself one of those cool Keurig machines. Gross. Why don't you just fill your mouth with hot water and blow it through a K-cup? Same thing. You don't need a machine to do it for you. Just fill your mouth with hot water and a little bit of instant coffee, swish it around, and then spit it in a mug. What are you reading, JD Power and Associates? They all have like fucking weird electrical gremlins and fit and finish issues. Especially Aston Martin and Range Rover. I doubt they care about AMC pumping because of the shareholder lawsuit. But without the machine, he wouldn't get the bacteria. You see the James Hoffman video where he bit that spherical K-cup thing? No, I didn't. I only watch his videos when I want to buy new stuff. I've been making my coffee like that for years. Way better than it's spelled espresso, not Nespresso is the same thing, except you swish more coffee in your mouth. My favorite is when Nvidia dumps hard with the market and doesn't recover with it. That's pretty cool, admittedly. Ooh. Did I eat today? I remember having like a small snack. What did I have? I had a croissant. Making money off $100 is really hard. No, it's not. You know how I do it? If I had $100 portfolio, and that was like All I had to my name. Every day at like 3:45, I would buy a 50-cent call or put, depending on the trend, on SPX with a 10% stop, and then just see what happens. If it goes in the money once, I 3x my port. And I can do that ten times before I can't do it anymore. So you only have to get 1 out of 10. You can't buy 1 in each direction. Then you can only do it 5 times. I mean, it doesn't need to go super hard. Like 43.80 is 55 cents. The put side is harder to play though. Because you need 43.60. Well, I guess it's about the same. Actually, the puts are a little, the puts cheaper. Oh, because I thought we were below 43.70. So yeah, they're 50. They're already 50 cents. You don't even need to wait till close. I said you have to have a 5%. You have to have a 10% stop. So max risk is 5 cents. Hmm. That's fucking weird. Odd. That depends on the broker and the exchange you use, Sumo. Implications of 4362 holding all day for multiple tests. There's a lot of sold puts at 4360. It's presenting some resistance. Huh. Trying to figure out why this isn't working. It's very odd. You think they're selling more puts? It's kind of hard to tell this late in the day. Hold on one second. My hunch for the end of the day, it could go either way, right? Like 43.75 could fail again. They could buy a bunch of calls and push it up above. I miss it every time you mention it. Is WeBull changing something and you don't like it? Yes. Hold on. Okay. That was insanely hard to get working. My dog is freaking out. Yeah, I had like an issue with one of the programs I'm using. Been busy. What's up with Jimmy? Is now a good time to sell my first covered calls? You can if you want to. Liquidity is contracting a little bit today, and I wouldn't do them near the money. And I wouldn't put a lot of if you are gonna do them near the money, I wouldn't sell them with a lot of theta. Volatility sucks though, so they're not really fantastic either way. It'd be fucking hilarious if YouTube took down the stream for some wild American Airlines ding noise trademark. Why no WeBull positions on stream? The account's still restricted. I'm waiting for it to transfer over to margin. They don't want to seem to give me a time frame on it when I contact them via email. It's kind of like, fuck you, it'll be done when it's done. I think it's my fault because I left a position open when I started the transfer, which makes it take longer. Gherk, we know you're just trying to shake all the play ghosters. I would never do such a thing. Watching those people lose money is part of the joy this stream brings me. In a stern PSA voice, it's 15:30 on a trading day. Do you know where your kids' straddles are? I know where I'm straddled. How's the inverse Gherk ETF doing these days? I don't know. It depends what got inversed. I managed to hedge down the big run like 2 weeks ago, so that wasn't too bad. But over the quarter, let's see, be down about like 7%. The inverse ETF would be down about 7%. Although, if we drop to 4,300, it's going to crash. George, I forgot to remove the lizard from my ceiling. He's dead. What does this mean for my puts? It's more of like a gray lizard now, right? Instead of a jade lizard. Is it the point of no return you see now? No. How did you even come to that conclusion? You know what, AJ? You jump to a lot of conclusions very, very quickly with almost no leading whatsoever. I said if we go to 4,300, the inverse GERK ETF will crash. How many of you listen to like 25 to 30% of the things I say? I'm starting to realize that a live stream may not be the best medium for communicating ideas and thoughts. You'd think it would be. You'd think it'd be perfect for like stocks, right? Because it's real time. No. We move to a newsletter format. Like a digital newsletter. I listen to you all day. That's why I have such a short temper. Listening to you reply to some of these halfwits. That's not nice to say about your co-chat. Real-time electroshock therapy is most effective. I hope Stefan didn't kill himself with his electroshock machine. I don't know, you ranted for a really long time about ups and downs and Greeks, and then you just didn't say puts or calls, so I got scared and bought VXX ADCs. Well, I mean, that's what people do when they're afraid. Popcorn trader, so it's understandable. I think halfwits was meant as a compliment. Oh. No, a monthly Zine analyzing SPX chain and decorated with pickle drawings. Jesus Christ, I'm not Tom Lee. What a fucking boring day. It was almost exciting. You know what, dork? It's not over, alright? Holy fuck, I love this new brokerage app. It uses 1 gig of RAM, 1 gig of RAM. And at any given time, it's only using 47 gigs of it. Or 47.47. This is nice. Dork. Question. What do you think of this? And could we use things like this more often? Do you see what I see? Is that a 3D pimento? Kind of, yeah. Hmm. I wonder if this will do anything before the end of the day, or we're just gonna trade flat here into close. Volatility's picking up a little bit. I get paid well, but I'm poor at heart. My 3 nieces have birthdays coming up. I just bought all their gifts, $2 each, even though their actual values are 200 each. Glitches for the win. Okay, nice. Oh, you could put all those extra savings into your $100 account. I bought a 50-cent SPX contract for 43.80. Hmm. 43.80 interest is picking up, as is 43.65. $75.65 are both 50 cents right at 341. Let's see how it plays out. As part of my gambling addiction recovery, I need to be transparent and let you know that I'm letting my 630 Tesla 170p expire worthless. Unless you think it's going to print. You think? Maybe? No. Are the stress test results ever fudged? I mean, if they're fudged, you wouldn't know. They'll be analyzed at face value. Whose face? Yours. Worth straddling KRE. Yeah, it could be, actually. Do these stress tests include duration risk? I think they do. I don't know what the format is for this year. I haven't looked. Don't try to take Baradactyl's job, Gordon. He hasn't reminded anyone. It's true. Hedges need trimming. I didn't wink at anybody. Yeah, Vix is moving. Can you explain what the JPM color means? Is it something that JPM plays like every cycle? Why is it a big deal? It's a massive options position, and it's rolled every quarter, and then smaller ones are rolled at the end of every month. I believe they have 3. They're part of their hedged equity funds. They have a flat rate of income return. What the fuck is wrong with you people freaking out about GME going up $1? How do all the market participants know where my positions are so they can position themselves to ensure that none of them go in the money? That's an excellent question, Darb. I had decided this slight loss, so I'm hoping for a dip to re-enter lower. 16 more days till a wash sale period is over. Oh, okay. Who was the guy who said we're probably running this week? Me. Pretty clearly on Sunday. Both the 40, 65, and 75 would have been stopped out multiple times. However, both were also up 60% multiple times. I think the tight stop on that would be the limiting factor. It's a factor. And if you get the entry wrong, you get stopped out. If you get the entry right, then it only goes up. I mean, that's kind of the gamble you have to take there, right? How does the derivatives market compare to now versus 2008? I mean, they're wildly different. There's way more interest now. Oh fuck, did I straddle? Oh yeah, I did. Okay. That's $38 cover call for Upstart 630. Good question. What's Gamma Max? I didn't look this morning. Hold on. GM's at 39. Here's the problem there. If it retests Gamma Max, like the market moves up to the 4,400 level, and it retests Gamma Max, you're gonna expire before. I mean, I don't know. Maybe you want to sell your shares at 38, but you'd probably end up having to roll. because they may not have time to come down. Dump. Four minutes. Not a lot of time. Come on, ES 4410. Drop. Jimmy about to MOASS? It's got some volume. Yeah. $2.8 million. How many ETF FTDs for GME over the next few days? It was like 182 today at 420,000 tomorrow. I'm not sure about the day after that. I don't think Carl did them yet. I'll see if he's busy tonight. George, I just lost $45. What'd you do? You wouldn't understand. Yes, 4410, yes, no's. Oh, maybe. Ding ding. Well, that was some easy money into close. I took my own advice and bought a bunch of 50-cent strangle. Not bad. Why didn't you tell us? How did that work out? Looks like I made like a... I mean, it wasn't big. I was just fucking around with it. But, like $300 cost basis. 3 on each side. $862 return. Profit. It's like almost 3x. But 50-cent contract, both sides? Roughly. I mean, here. Overstock buys Bed Bath & Beyond brand, other IP, OSTK, LOL, towels incoming. Wasn't that already news? I thought like Overstock's been trying to buy them for a couple weeks now. Web3, same as AI, GME MOASS. All right, well, we closed above the 43.75s again. I guess we'll see what futures doing after hours. But still right on the brink of all of that shit being dead. SPX closed down 0.03%. VIX kind of flattened at the end of the day there. Just under 1350. GME had a little pump into close. I don't know if it was on some kind of news or something. But there was a tiny bit of volume there, which was interesting. Now it looks like they're selling all of it. Fucking retail, man. Just immediately selling the $1 pump. Look at them go. No, I don't really know what's going on with this. A little bit of liquidity realized on it, though. That may have had some effect. It's like, if you look at this on like the 1 hour, there's a little bit of liquidity realization like yesterday and today. I mean, further out, not a lot, right? Like they haven't really moved, but maybe a little contraction here. Kind of like the bump that we got back here in March after earnings. If you guys can see that. That one also ended in like kind of a big price spike into close, which is interesting. But yeah, I mean, still pretty liquid. Maybe it's got like another day of upside left in it because the tips haven't crossed back over. Not that they necessarily will, but they haven't. What's SPX look like? SPY? This one? This is actually starting to collapse, which is interesting. On the 1 day, though, it's expanding. 4 hour. Well, these are contracting. But that's not. What's that? Oh, okay. Well, that kind of makes sense. Ooh, an ES shot up in after hours a little bit. Back to 44.23. Yeah, that's about it. All right. Well, thank you guys for tuning in. I'll see you tomorrow morning. Have a good one, everyone. Good night.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
My mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult.